As of today, we have only 142 legislative days before taxes will go up for every single American if Congress fails to act. 1 year from now, the paychecks of every working American will look a lot different, as on average, their taxes will go up 22%. During the first Trump presidency, the tax cuts were the rocket fuel that propelled America out of the stagnation of the Obama years. By every conceivable measure, American workers and the economy were better off. Americans earned bigger paychecks, unemployment for every group was at historic lows, and poverty dropped to its lowest level in American history. Buying a home was an achievable part of the American dream, not just a dream never to become reality. Low-income taxpayers were helped more than those at the top. American earners under $100,000 received a 16% tax cut, while the amount of taxes paid by the top 1%, in fact, increased. Small business optimism hit record highs. American corporations stopped shipping their headquarters, jobs, and tax revenues overseas. The economy soared, creating 5 million new jobs. In the 2 years after the 2017 tax cuts, the economy grew a full percentage point faster than the Congressional Budget Office projected. And over 10 years, that equals $3 trillion in new revenue. Even though we lowered taxes, tax revenue went up. In fact, we have already seen $1.6 trillion in higher revenues than what CBO projected. Americans are demanding we restore prosperity and build upon the success of President Trump's economic policies that gave the American people the best economy in my lifetime. However, that effort is at risk if we do not make the 2017 tax cuts permanent. If Congress fails to act, the average family of 4 will end up paying the equivalent of 9 weeks of groceries in higher taxes. After 4 years of sticker shock at the grocery store, that's the last thing families need. 40 million parents will have their child tax credit slashed in half. 2 million family farmers will see the death tax exemption slashed in half. 91% of all taxpayers will see their guaranteed deduction slashed in half. 26 million small businesses will be hit with a 43.4% top tax rate, more than 20 points higher than what businesses pay in communist China. Today, as we speak, businesses are making decisions about where they are going to invest, hire, and grow this year and in the years to come. And they're making those decisions based on the taxes they expect to pay. And uncertainty is an unnecessary weight on our job creators and our family farmers, who will have to start calling accountants and estate planners to figure out how they might navigate higher taxes. If we want to continue President Trump's legacy of a strong economy, Congress must act swiftly to make the tax cuts permanent. Americans don't have the luxury of waiting. Many have been waiting for years for relief. Before us is the opportunity to permanently remove the uncertainty and anxiety that dampen business expansion, job creation, and economic growth. Making the 2017 tax cuts permanent is key to unlocking a second economic boom in a second Trump presidency. We would see $284 billion in new GDP growth from a boom in manufacturing, $150 billion in new small business GDP growth from small businesses expanding, hiring new employees, and investing in their community. $50 billion in Opportunity Zone investments to revitalize the poorest neighborhoods in this country. Over 1 million new small business jobs each year just for making the small business deduction permanent. And just this morning, before this hearing, the National Association of Manufacturers released a new study revealing that 6 million jobs would be saved, including 1.1 million manufacturing jobs by extending the Trump tax cuts. We must not leave families and small businesses waiting for Congress to do the right thing and provide tax relief at the 11th hour. We must make the Trump tax cuts permanent as soon as possible. I'm glad we are joined by our witnesses, Americans whose lives were improved by the 2017 tax cuts, and look forward to hearing their stories. I'm pleased to recognize the ranking member, Mr. Neal, for his
Thank you,
opening
Chairman. I came to the committee because I believe in the tax code as an engine for change. And let's be clear, I've been a pro-growth, pro-prosperity, but pro-fair shot member of this committee, which is exactly what the American people are asking us to do right now. Recently, the Financial Times and The Economist magazine said that the American economy was the envy of the world. I was struck by the hearing title, quote, "The need to extend Trump's tax cuts for working families," when we know that most of these cuts went to people at the very top. Indeed, the top 2%. The American people are living under this tax plan, and they need relief from it. The American people need lower costs. Our Republican colleagues are looking to come to the aid of the strongest and wealthiest among us once again. Last week, Treasury released a new report confirming that if this exercise was actually about lowering costs for working families, Republicans wouldn't be running their 2017 playbook back to the tune of $1.8 trillion of borrowed money. I don't understand the logic of suggesting that we're going to attack the national debt and simultaneously add $4 trillion to it by a tax cut proposal. A reminder that we had the opportunity here to address the national debt and tax relief for middle-class Americans and people at the lower end of the scale, but that was not what was entertained. So we're talking now about adding $4.6 trillion to the deficit as part of their mandate. We could lower this cost by making up the difference by extending premium tax credits in the Democrat expanded child tax credit initiative. We can put more money directly into the pockets of those who need it. It's been proven time and again that parents who received our monthly payments spent the money on necessities. Child poverty was cut in half, and a recent study found parents actually cut back on cigarette use, likely because of decreased stress from the security of having more relief. Our colleagues are charging ahead on this policy because it graduates from a concept of a plan to empty action, cutting taxes for corporations and billionaires on the backs of people that really need help. We're all looking forward to seeing how the proposals will play out as to how the initiatives will be embraced to cut many important social programs while we cut taxes on the Republican side for the wealthiest among us. They're guising this agenda behind what they are calling a clear mandate. I asked this morning, what mandate? The smallest popular vote margin in a quarter century, the fourth narrowest by percentage since 1960, losing seats in the House of Representatives. The only mandated agenda we should be focused on is one that the American people deserve and the one they want, working together to make their lives more affordable. The American people deserve better than these tax cuts being extended without any questions being asked. They deserve a worker-centered agenda that delivers relief and gives them, as I noted earlier, a fair shot. They need peace of mind in caring for themselves and indeed their loved ones, and Democrats are going to continue to fight for that, not a cash grab that will be discussed as we proceed this morning. With that, I yield back my time.
Thank you, Ranking Member Neal. I will now introduce our witnesses that's with us today. The first one, Michelle Gallagher, is a partner at Adamy, Valuation, and Gallagher, Flintoff, and Klein. We have Margaret Marple, is a mother from Lynchburg, Virginia. And we have Alison Couch, is the owner of Ignite Accounting and Business Advisors. And we have Courtney Silver, is president of Ketchie Incorporated. And Brendan Duke is senior director for economic policy at the Center for American Progress. Thank you for joining us today. Your written statements will be made part of the hearing record, and you each will have 5 minutes to deliver your remarks. We'll start. Ms. Gallagher, you may begin when you're ready.
Chairman Smith, Ranking Member Neal, and the distinguished members of this committee. Thank you for the opportunity to provide testimony today on the importance of permanently extending provisions of the Tax Cuts and Jobs Act, TCJA. My name is Michelle Gallagher. I am a CPA from the great state of Michigan with 35 years of experience working with businesses of all sizes, working families, and multi-generational family enterprises. I have seen firsthand how the provisions of the TCJA have provided critical support to the businesses, farmers, and working families that form the backbone of our economy. To start, I want to strongly encourage Congress to make addressing the permanency of TCJA your top priority. Taxpayers and their advisors are desperately seeking certainty and predictability so they can plan for the future. Without clarity, businesses and farmers are likely to delay or forego investment, which could stall economic growth and depress job creation. Congress cannot risk waiting until later this year to address these important tax provisions when it is simply too late for taxpayers to react. The 199A deduction has been critical for businesses organized as sole proprietors, partnerships, LLCs, and S corporations, which represent nearly 99% of my business clients and the vast majority of businesses in Michigan and nationwide. They also employ most of the country's workers. 199A helped many small business clients stay competitive with large corporations on wages and hiring when inflation was skyrocketing. And during post-COVID economic rebound, many of my clients increased their investments in equipment to make use of the 199A deduction, as well as the last full years of bonus depreciation. If the 199A deduction expires, the taxes on pass-through businesses will go up sharply, while C corporations and publicly traded companies will continue to enjoy their lower 21% TCJA permanent corporate rate. This simply is just not fair to the Main Street businesses and farmers of our country. 199A should be permanently extended, period. Full bonus depreciation under the TCJA has also been a game changer for my business clients. Immediate deductions have freed up capital for investments in state-of-the-art equipment, resulting in increased efficiency, production, and job creation. Lower marginal tax rates for nearly all taxpayers have bolstered the financial health of businesses and farmers and provided relief for working families. When marginal rates are higher, families must tighten their belts and businesses face greater financial strain at the expense of growth opportunities. When marginal rates are lower, working families have more take-home pay and they can invest more in their families and communities. If the marginal rates are not permanently extended, nearly every American worker will go home with a smaller paycheck starting in just 11 short months. The doubling of the standard deduction has simplified tax filing for millions of Americans and provided substantial tax savings for middle-class families. In addition to these tax savings, the simplicity has saved taxpayers valuable time and enabled them to focus on running their businesses, farms, and households instead of navigating complex tax filings. The expanded child tax credit under TCJA has been a lifeline for working families and has even had a direct impact on my own family. My brother, who works as a public school teacher, relies on this child tax credit to help provide for his wife and 7 children between the ages of 4 and 19. His modest salary is stretched thin, and the child tax credit has been essential to covering their family expenses. For families like this, the expanded child tax credit is not just helpful, it is indispensable and must be retained. The estate tax presents a constant source of worry and financial burden for many family businesses and farmers that I work with. Many business owners and family farmers may appear wealthy on paper, but almost always lack the cash or liquidity to pay estate taxes. I have seen this lead to family businesses closing or being gobbled up by multinational corporations because they realize they cannot afford to pay the death tax. Additionally, compliance costs related to the estate tax amount to over $18 billion annually, according to the Tax Foundation, a figure that actually exceeds the annual estate tax revenue collected. That's right, more money is spent annually complying with the tax than the government collects in the tax itself. The estate tax is, if the estate tax is not addressed this year, the current exemption will be cut in half, doubling or tripling the amount of unexpected families forced to pay this death tax. Congress should pull the plug on the death tax for good. No grieving family has to deal with this unfair double tax. Small businesses and farms are the heartbeat of their communities, creating jobs and fostering local economic growth. As someone who has worked closely with businesses, farmers, and working families for 35 years, I have seen the tangible benefits of the TCJA firsthand. I urge Congress to permanently and swiftly extend these provisions to provide certainty to America's small businesses, farmers, and families. Thank you for the opportunity to share my perspective. I look forward to our discussion here today.
Thank you. Ms. Marple, you are now recognized.
Chairman Smith, Ranking Member Neal, and members of the Ways and Means Committee, thank you for your invitation to testify today on the importance of the child tax credit. My name is Margaret Marple, and I'm the mother of 3 children, all boys, ages 9, 2, and 1. Before I first became a mother in 2016, I did not know about the child tax credit. I also did not know how challenging it would be to provide for my children. This challenge increased when I became a single mother in 2017 after experiencing a betrayal and divorce. For 4 years, the child tax credit served to lighten the load of providing for my son with one income and childcare expenses. It was especially helpful to me in 2018 after Congress passed the Tax Cuts and Jobs Act, doubling the child tax credit to $2,000. I remarried in 2020 and for 2 years received the child tax credit as a 2-income household. My husband and I had 2 more children, and at the end of 2022, I decided to stop working to give my very young and active sons my full time and attention at home. Last year, with only my husband's income supporting our family of 5, we witnessed the child tax credit making all the difference. My husband and I both have college degrees. We have no school debt or credit card debt, yet the majority of our money goes to covering the essential yet astronomical costs of medical care, groceries, and gas. It takes us over a year just to pay the hospital bill for simply giving birth to a child. With an income of $75,000 and without the child tax credit, last year we would have owed the government over $2,000. What a discouragement it would have been to have yet another financial burden placed on our shoulders after filing our taxes. However, because of the child tax credit, we received back over $3,500. At times, the money we have received from the child tax credit has been the only money in our savings account. We are not looking for a handout. My husband and I understand that it's our job to provide for our children. What we want is an opportunity to thrive. We want to be able to save our hard-earned money for our children's future, so when they leave home, they are not burdens on society, but burden lifters. This is what I know about being a hard-working mother today in America, whether single or married. I am raising children in a culture of giving up. At every turn, there is a temptation to give up on your marriage, on your children, on yourself. Just look at divorce rates, suicide rates, and abortion rates. People are giving up on children before they even come out of the womb. But all human life, from conception to natural death, is valuable. As a mother, I am unwilling to give up on my children. Children indeed are the future of our country, and like millions of other young people, I am ready for America to be a place again where families can truly thrive. The child tax credit promotes the flourishing of families, and when American families are strong, America is strong. The child tax credit is a simple yet significant way the tax code can communicate the value of hardworking parents trying to provide for their children under the current weight of high inflation and an unmanageable cost of living. The financial benefit of the child tax credit lightens the load of the financial burden parents carry, but also serves to affirm and enforce the value parents hold. We don't want to be rescued, we want to be valued. Parents need to hear from their government leaders. Don't give up. Your dedication and sacrifice remains valuable to this country. Without the child tax credit, how else would the government show it supports the important social role of parents? Making the child tax credit expansion within the Tax Cuts and Jobs Act permanent would assure parents like me that our value to this country will not be forgotten. As parents persevere and as the government prioritizes financially what's truly important, I believe America's current culture of giving up will turn into a culture of life and strength. Finally, I want to thank this committee for leading the way in passing the Bipartisan Tax Relief for American Families and Workers Act last year. That bill, if it had been signed into law, would have helped the child tax credit reach working and growing families like mine, and updating the child tax credit for inflation would have served to lighten the heavy load parents are already carrying as we work to provide for our families in this economy. I hope you will consider parents like me when negotiating and crafting the upcoming tax package, and look for ways to further extend the 2017 child tax credit expansion. Congress has an opportunity this year to help American families flourish by making the TCJA's child tax credit permanent and consider further improvements, as was done in the bipartisan tax package last year. Thank you for your opportunity. Thank you for the opportunity to testify on this important issue.
Thank you. Ms. Couch, it's great to have you back with our committee. I believe the last time we saw you was at a field hearing in Peachtree City, Georgia, so we're glad to have you back. You're now recognized.
Thank you. Good morning, Chairman Smith, Ranking Member Neal, and members of the House Ways and Means Committee. My name is Alison Couch, and I'm the president of Ignite Accounting and Business Advisors. Thank you for inviting me to your hearing today to provide real-world testimony on critical issues before you. As many of you may remember, this is my second time that I have testified before this committee on the important issues being addressed today. In April of 2023, I came before the Ways and Means Committee at a hearing in my home state of Georgia to discuss the challenges facing the small businesses that my team and I work with, as well as what your committee can do to support the problems that they face. During that hearing, I underscored the need for Congress to renew provisions of the Tax Cuts and Jobs Act of 2017 that small businesses have become dependent on, particularly the 20% small business deduction, Section 199A, and work to reduce regulatory burdens on small businesses so that their limited resources are not consumed with meeting this onerous requirements. Today, my testimony will be much the same. As we get closer to critical parts of TCJA expiring at the end of this year, the clients that my team and I support still lack the certainty of whether or not many of the provisions that their businesses depend upon will be extended. These include the 20% small business deduction and reduced rates for individual income tax brackets. Moreover, they are still faced with steep regulatory requirements imposed by taxing authorities that deplete much of their time and efforts. For those new to the committee, I sit before you today with the perspective of true American small business owner. My own small business, Ignite Accounting and Business Advisors, is an accounting firm based in Columbia County, Georgia. My small but mighty team services over 200 clients by providing bookkeeping, financial statement preparation, sales tax, payroll tax, property tax, and income tax services. As I said in my previous testimony, my business is a small business that nurtures other small businesses, and a critical aspect of our work is providing financial advice to our clients, which can often include providing a listening ear and encouraging words, and that perspective is a crucial part of any testimony presented before you. In my April 2023 testimony, I underscored the need for Congress to act to preserve the 20% small business deduction. In that testimony, I stated that the tax burden on small businesses was already incredibly heavy, and allowing this deduction to lapse when it has been in place for so many years will not feel like a sunset, but a tax increase. Today, with this section of the tax code set to expire in less than 1 year, this remains true, and I urge Congress to act swiftly to renew it. The small businesses that I work with have become dependent on having access to these funds, and they need the certainty provided by making the 20% small business deduction permanent. My typical client generates $3 million or less in annual revenue, employs an average staff of 10 people, and depends on the small business deduction. I have practiced public accounting for 21 years and can tell you without a doubt that the 20% small business deduction has been the single most beneficial tax deduction for small business owners. Moreover, this deduction is more far-reaching vertically and horizontally to small business owners when compared to other deductions. For example, depreciation deductions require significant cash flow reduction or taking on debt, but Section 199A does not. This is true of small businesses nationwide. A recent EY study on the macroeconomic impact of Section 199A for small businesses found that 25.9 million small businesses nationwide utilize this deduction, and that it directly supports job creation in the small business sector. As part of my testimony today, I would like to submit that report to the hearing record. Another area of apprehension for small business clients is that if Congress does not act, the reduced tax rates for individual income tax brackets established under TCJA will increase. As members of this committee are aware, the 20% small business deduction is available to businesses that operate as pass-through entities like S corporations and partnerships. This means that their business profits and the deduction flows from their business return onto their 1040 and nets there to be taxed at the owner's individual tax rates. In fact, 33 million small businesses in the United States are organized as pass-throughs. As I stated in my testimony in April 2023, business income is different from business owners' income. I would like to stress that point yet again. Increased business income allows small business owners to reinvest in their businesses and employees. If Congress does not address the changes in the personal income tax brackets set to expire at the end of this year, small businesses structured as pass-throughs will be faced with a tax increase. Finally, in my April 2023 testimony, I highlighted the issue of regulatory burdens imposed on small businesses by the IRS, particularly the thresholds on 1099 NEC and 1099K forms. The threshold of 1099 NEC of $600 has not been adjusted in decades. I would ask you to consider a one-time adjustment of this threshold to account for the impact of inflation over the years where no adjustment has been made, and then an annual adjustment thereafter. On the other hand, while the threshold for 1099K has been adjusting, it's moving in the wrong direction. For the years 2023 and prior, payment apps and marketplaces have been required to send out forms to taxpayers who receive over $20,000 and have over 200 transactions. For 2024, the threshold moves down to $5,000, and for 2025, $2,500. The intention is to further reduce it to $600 for the calendar year 2026 and thereafter. For the years 2024 and after, 1099K requirements are based solely on dollar thresholds with no consideration for the numbers of transactions. As the committee reviews the proposals to reduce burdens on small businesses, I urge your members to consider reversing the course on lowering the 1099K threshold amounts and instead work to increase them. Thank you for the opportunity to testify today, and I look forward to answering any questions.
Thank you. Ms. Silver, you are now recognized.
Good morning, Chairman Smith, Ranking Member Neal, and members of the committee. Thank you for inviting me to speak on why Congress must preserve the Tax Cuts and Jobs Act and how its policies ensure that manufacturing remains the driving force of the American economy. My name is Courtney Silver, and I'm president and owner of Ketchie, a third-generation precision machine shop located in Concord, North Carolina. Since 1947, Ketchie has been a reliable part of the manufacturing supply chain because we invest in equipment, technology, and most importantly, people. I'm honored to be with you today, as this hearing marks the beginning of a historic year for the committee. Critical pro-growth provisions from tax reform have already expired, and more harmful changes are on the way at the end of this year. This means that every member of this committee has the opportunity to take real action that supports manufacturing in America, and the stakes couldn't be higher. A new study released today by the National Association of Manufacturers shows that nearly 6 million American jobs are at risk unless Congress preserves pro-manufacturing tax policies. America will also lose more than $500 billion in worker pay and more than $1 trillion in GDP. Manufacturing will bear the brunt of this economic devastation with more than 1 million manufacturing jobs at stake. This economic damage makes sense because the Tax Cuts and Jobs Act was revolutionary for manufacturers. After it was signed into law, Ketchie experienced the best year in our 7-decade history. Over 2018 and 2019, we were able to invest more than $1 million in capital equipment and create new jobs within Ketchie. We upgraded our security, our HVAC systems, and invested in new technology on our shop floor. And most importantly, we provided raises and bonuses to all our employees because without them, our growth would not have been possible. Business boomed throughout our supply chain, and demand for our parts soared. Our typically organized shop floor was covered in pallets of materials to keep up with our customers' orders. Unfortunately, beginning in 2022, critical pro-growth provisions began to expire, such as immediate R&D expensing, enhanced interest deductibility, and full expensing for capital equipment purchases. And more harmful tax increases are on the way, further threatening manufacturers like Ketchie. The loss of the pass-through deduction, increased individual rates, taxes, and changes to the estate tax will hurt my ability to grow and create jobs in Concord. In addition, it is important to preserve the 21% corporate tax rate and new international tax policies, many of which impact Ketchie's customers and suppliers. Manufacturers know the only way to succeed is to relentlessly focus on the future by pouring resources back into your team and equipment. The Tax Cuts and Jobs Act allowed me and so many others to do so. With 6 million jobs on the line, the time to act is now. These policies are vital for our economy, but I also want to share how they are changing lives and opening doors to new opportunities. Tax reform enabled me to create Opportunity Knocks, an internship program that brings students in to shadow our team on the factory floor while earning school credit. 2 of our recent graduates had little direction on what to pursue after high school. Thanks to our program, they fell in love with manufacturing. They are now full-time apprentices and are able to provide for their families while also contributing to their community and working on a team they admire. Put simply, we are inspiring the next generation of manufacturers in America. Congress has the opportunity to help support this important work by enacting permanent and consistent pro-growth tax policy. Thank you, and I look forward to your questions.
Thank you. Mr. Duke, you're now recognized.
Thank you, Chair Smith, Ranking Member Neal, and members of the committee. My name is Brendan Duke, and I'm Senior Director for Economic Policy at the Center for American Progress. I'm honored to testify today about the 2017 tax law and the implications of its expiring provisions this year. Let's start by remembering how we got here. Congressional Republicans and Donald Trump deeply wanted to cut corporate taxes in 2017. They also knew that just cutting taxes for corporations without providing tax cuts for families would have been a political disaster. And because they wanted to pass their tax bill on a party-line vote, they could not increase deficits beyond the 10-year budget window. This gave birth to the bill that passed. They made a big, permanent 40% cut to the corporate tax rate. Then they did a series of tax cuts for individuals, heavily tilted to the wealthy, that expire at the end of this year. And here we are today, at the beginning of the debate about what to do about them. What have we learned? First, the corporate rate cut, the centerpiece of the original bill, was a massive windfall for investors, spurring a $1 trillion surge in stock buybacks. Yet it failed to meaningfully increase investment, and none of that windfall trickled down to ordinary workers. And the recovery in housing investment after the Great Recession screeched to a halt after the bill passed. CBO, in fact, projected that, quote, residential investment is reduced throughout the entire period by crowding out, end quote. And now, CBO says that extending the expiring individual provisions will shrink the economy in the long run. Given that the tax cuts didn't trickle down, we should then focus on their direct distributional impact. Who got what? Any way you look at it, extending these expiring provisions will increase income inequality, cutting taxes for rich people while giving pennies to everyone else. The average tax cut for the top 1% of households is more than 60 times larger than that of the middle 20% of households. And even these numbers are too rosy. We are talking about a bill that will add $4 trillion to deficits over 10 years. These tax cuts numbers include money we are borrowing that we will have to pay back one day in the form of tax increases or spending cuts. One financing mechanism Trump has floated is a giant across-the-board tax on all imported goods. A range of analyses from progressive to conservative think tanks estimate that this would cost a typical family thousands of dollars by making a trip to the grocery store or pharmacy more expensive. Alternatively, they can pursue cuts to vital programs. Tesla CEO Elon Musk, a co-head of the new Department of Governmental Efficiency, has proposed $2 trillion in annual spending cuts. Taken literally, this would cut every program in the budget on average by roughly 1/3, including Medicare, Social Security, food safety inspection, cancer and stroke research, and nutrition for newborns. Finally, the Trump administration and Congress could find the easiest way to offset the tax cuts is to just not offset them. That's what we did last time. But there's no free lunch here. The tax cuts will likely be paid for eventually in the form of spending cuts or tax increases down the line. And in the meantime, continued or even higher deficits could mean continued or even higher interest rates. That makes housing, student loans, and credit card debt less affordable for working people. We shouldn't ask middle-class families trying to buy their first home to shoulder the burden of financing tax cuts for millionaires. This is an especially poor choice when the economy is strong and unemployment is low like it is today. Higher deficits can be a useful tool for getting a depressed economy to full employment, but today they just mean higher interest rates. The very real danger of cuts to programs that working and middle-class families rely on and higher interest rates highlights why Congress must offset any tax cuts they extend in a revenue-neutral manner. And simply changing accounting conventions to pretend extending tax cuts have no cost does not remove the burden that extending these tax cuts will place on federal and eventually on families' finances. The good news is that Congress can cut the cost of extending the tax cuts by simply refusing to extend them for the top 2% of households making over $400,000. The Treasury Department released an analysis last week showing that would cut the cost of extending the expiring individual provisions from $4.2 trillion to $1.8 trillion. In other words, we are talking about a $2.4 trillion tax cut exclusively for the top 2% of households. It's worth noting that $2.4 trillion is also the total amount of cuts to Medicaid and the Affordable Care Act in Budget Chair Jody Arrington's proposed list of offsets that came out last week. These healthcare cuts aren't necessary. They're entirely about making room for a tax cut exclusively for the top 2% of households. Not extending tax cuts for the top 2% also makes the cost of offsetting remaining tax cuts easier and makes room for Congress to take real steps to bring down the cost of living by extending the Enhanced Affordable Care Act tax credits while improving the earned income and child tax credits. The American Rescue Plan expansion of the CTC represents the gold standard, but I'd like to commend Chair Smith for his work last year on a bipartisan compromise on the CTC. It would have made a real difference for working-class kids whose parents do hard work as home health aides, construction workers, and waiters. Preventing tax increases on working and middle-class families next year is not a reason to cut taxes for the wealthy. Cutting taxes for the wealthy is a choice Congress may make this year, but it is a choice. Given that working and middle-class families will end up paying the price, letting the tax cuts for the wealthy expire is clearly the correct choice. Thank you.
Thank you for your testimony. We'll start with Ms. Gallagher. I'll ask the first question. Ms. Gallagher, one of the major reasons to extend the 2017 Trump tax cuts as soon as possible is to give America workers, families, farmers, and small businesses certainty in the long run. Small businesses are facing a 43.4% tax rate if the 199A small business deduction, as I refer to it, expires. This looming threat impacts decisions they are making today about whether to invest, grow, hire. The same is true for the 2 million family farmers facing a potential increase in their death tax. If Congress doesn't act soon, family-owned farms and Main Street businesses will have to start calling estate planners and accountants to figure out how they navigate the potential increases in taxes. So can you speak to how this uncertainty drives decision-making today among America's families, farmers, small businesses?
Yes, thank you, Chairman. My phone has been ringing off the hook since last August with the pending election of families and business owners and the uncertainty of where this tax change may go. We have been running meetings and scenarios with our clients for months now, trying to plan for the future. Many successful businesses do their forecasting out not just 1 year, which is just the year we're in now, but the most successful ones plan out 3 years, 5 years, 10 years out, especially when they're looking at investing, whether it's investing into more employees or more equipment. That takes capital, and it takes time to accumulate that capital to be able to afford it. And so it is imperative as an advisor to these folks to be able to help them navigate these tax policies. I've been around 35 tax seasons, and I have experienced last-minute tax changes by our government, and it is extremely frustrating, not only on the taxpayers, but frankly and selfishly, the advisors as well. So I can't encourage you enough to do this swiftly and quickly to help our businesses and our farmers make some decisions.
Thank you. Miss Marple, we have talked about how working families have watched prices rise by over 20% over the past several years, or how wages have fallen 3% since President Biden took office. The last thing families need is to see Washington slashing their child tax credit in half. 40 million families would be impacted. And as a mother, can you share what it would mean for families if Congress failed to act and allowed the CTC to be cut in half? And how would shrinking the CTC to just $1,000 impact a couple's thinking about starting a family or growing their family?
Thank you, Chairman Smith, and thank you to this committee for holding this important hearing. My family and working families like mine know the financial benefit of the child tax credit lightens the load of the financial burden parents carry, but also serves to affirm and enforce the value parents hold. Slashing the child tax credit in half, or by any amount for that matter, would only increase the challenges parents face to raise their children in this economy, and it would communicate that the government does not value parents. Congress has a historic opportunity this year to help American families flourish by making the TCJA's child tax credit permanent and by considering further improvements, as was done in the bipartisan tax package this committee passed last year.
The 2017 Trump tax cuts revived American manufacturing. We saw 20% growth in investment here at home, thanks to policies like 100% immediate expensing that incentivized American manufacturers to buy new equipment and expand their operations. Stronger manufacturing at home not only contributes to our economic security, but our national security as well, helping secure supply chains and make us less dependent on hostile nations like China. Unfortunately, incentives for American manufacturing have already started to go away, as what was testified, Ms. Silver. Ms. Silver, as a small business manufacturer, how has that affected your business planning, and what would it mean for you if Congress were to restore the 100% immediate expensing?
Thank you for the question, Chairman Smith. Yeah, full expensing has impacted me greatly. I have a area on my shop floor that is empty, and I've hit the pause button. I put that capital equipment purchase on hold because of these expired tax provisions. It changes the return on investment calculation for me. The business decision feels more risky, irresponsible, and it impacts the creation of jobs. It impacts my competitiveness. I'm at risk of falling behind my international competitors. My international competitors are investing in similar advancements that increase their productivity, increase their throughput. And so yeah, this affects my ability to be competitive. And my customers are large manufacturers across this country, and they really need three things for me, and it's high quality precision machine parts delivered on time at a competitive price. For me to be able to do that, I have to make investments in our people, I have to make investments in our process and equipment technology.
Thank you. Looking beyond current policy, how would businesses like yours respond to new incentives for domestic manufacturing, such as a quicker cost recovery for investments made in new facilities and other policies that further lower the tax burden on those who produce here in the U.S., as President Trump suggested?
It would make us more competitive. We would grow, we would thrive. We'd be able to innovate more, take risks. It would really drive us, and it would drive the whole manufacturing supply chain. It's tough to face uncertain tax code that's changing. We're a pass-through organization, and so I pay taxes at the individual rate, so I feel like when those rates are being debated and changed, it feels like you're debating the future of my company. And a lot of times that pass-through income is not liquid. It's tied up in receivables, inventory, work in process. And so any policy that Congress can enact that's permanent, that's consistent, predictable, will help us greatly to be able to continue to support the whole manufacturing supply chain in our country.
Thank you, Ms. Silver. Mr. Duke, I was just curious in regards to the income tax rates and the tax provisions that affect people making less than $400,000 a year. Is that something that you would support making permanent for the people under $400,000 per year?
If we could find a way to offset the cost by raising taxes on wealthy people, deficit finance tax cuts aren't a good idea right now.
Thank you. I recognize the ranking member for questions.
Thank you, Mr. Chairman. I want to thank our panelists as well. It's always an opportunity for instruction and to hear sometimes competing perspectives. So, Ms. Gallagher, are you aware of the fact that in TCJA that the Republican Party borrowed $2.3 trillion for the tax cut?
Thank you for your question, Congressman Neal. I am not in tune with the extent of any numbers or statistics to that level for today's testimony. I am well aware there are plenty of trade-offs in all negotiations, in all tax policies that we encounter, and so I'm not familiar with the exact numbers, I'm sorry.
So let me follow up with that and ask the following question. Are you aware of the fact that their intention here is to ignore what is known as the baseline here? So that means they're going to ignore the $2.3 trillion that they borrowed and erase it. Now, just professionally, would you advise your client to ignore their credit card debt or their mortgage debt or their property debt and take on more debt if they couldn't sustain it and then complain about the debt they already have?
Well, again, I would say that, first of all, I'm not aware about the intention of the baseline argument for us here today. There are many factors that go into decisions when I help my clients make decisions about taking on debt. In particular with my clients, not necessarily speaking of the federal government, sometimes debt is okay and it needs to be incurred. And so I would just comment that it's not always a negative.
Yeah, fair enough, but would you tell your client to ignore the debt that they have?
No.
Thank you. Ms. Marple, appreciate your comments. They were really well done. So were you able, I hope, to have taken advantage of the child credit expansion that the pandemic relief packages offered?
Thank you, Congressman. I'm here today to talk about the current 2017 expansion, which has made a huge difference for my family since 2018 and is going to expire in December if Congress does not act. I would refer you to the tax experts on this panel who can speak to you about the other policies.
No, fair enough, but I assume that because of electronic deposit, you were able to receive the enhanced child credit during the pandemic?
I was able to receive that, yes.
Thank you, thank you. So, Ms. Silver, were you able to take advantage of any of the pandemic relief packages for investment in equipment or some new opportunities within your business? And I have a huge precision manufacturing constituency, so I hear the arguments you're making.
Yes, I was.
You were. Okay. Did that add to the national debt?
I'm sure it did.
Thank you. Mr. Duke, so the proposal here today, based on the statistical data that we've heard, is that last year, or as the proposal goes forward here, A taxpayer who made $1 million last year, they're going to receive a tax cut of $78,717. This is not according to the Democratic National Committee. This is according to the Joint Committee on Taxation, which we all have the highest regard for. So a taxpayer who made under $50,000 is going to get $273? Do you want to expand on that?
Sure. So we know that the tax package is progressive. We know that the tax cuts for high-income households are just much higher than they are for low-income households. It's true as a percentage of income, too. We know that extending them is going to increase income inequality. And I think the Treasury analysis put out last week just really, throws it out there that we have a $4.2 trillion tax cut, but you can really break it into two pieces. There's a $2.4 trillion tax cut for households making over $400K, and a tax cut for low and middle income families and upper middle class families of $1.8 trillion.
Sure. So I'm delighted that you were able to take advantage of the initiatives that we put out. Very pleased. And that's why the American economy, as the Economist pointed out, and the Financial Times pointed out, is the envy of the world. We rebounded so much more quickly than the rest of the world. However, it did add to the debt. We acknowledge that. The plan here today that the Republicans are talking about is to ignore what they borrowed and proceed with more borrowing and then complain about the size of the national debt. I yield back my time.
Mr. Buchanan is recognized.
Yeah, thank you, Mr. Chairman. I want to get one thing off the table a little bit. As chairman of the Florida Chamber, I can tell you we had 130,000 businesses. This is a while back there. 95% were pass-through entities, and they're dealing with these potential tax rates. That's what scares a lot of people in our area. Most of the companies are 25 employees or less. I chair our local chamber, same thing, couple thousand businesses, 25 employees or less, just like you've got, Ms. Silver. That's where we need to be focusing on. The idea that you could have a tax rate of 43%, and then many states add another 10%, it's over 50% tax rates throughout the country. That's why so many, frankly, I'll just be candid, are moving to Florida. I hear it all the time, moving to Texas, because they don't mind paying a little bit more, but they're not going to pay 50% plus rates. So I want to say that. The TCJA was rocket fuel for American economy. Businesses grew rapidly. Families paid less taxes, and government revenues increased due to the economic growth. Allowing the legislation to expire would raise the taxes on over 200 million folks from that standpoint. The point I want to make, the big point I want to make is I introduced H.R. 137 TCJA Permanency Act that would make the law permanent. And Ms. Silver, you touched on a little bit on expensing or depreciation, but a lot of people don't realize, to me, it's kind of a timing thing. We had bonus depreciation where you got 50% plus 10, but it makes such a huge difference having that ability to deduct that, even though it's a timing type issue. Is that your thought on it?
Absolutely. As a small business, there are small businesses that have long-term contracts, but in my business, we typically don't. So there is a lot of uncertainty as you look forward in your business and think about your strategy. So yeah, absolutely, being able to deduct that full investment.
How many employees do you have?
20.
Yeah, and that's my point. Most of America, when they don't, it's not the gigantic corporations. Yeah, they're out there in a big way, in terms of few numbers, but a lot of employees, or the billionaires, and I'm not defending any of that, but I am defending people like yourself, startups, and people that are entrepreneurial, have it all on the line every day, need to make a payroll, and that's why this is where I look at it from these tax advantages. Mrs. Gallagher, what's your thought in terms of, you mentioned, I don't know if you touched on much 199A. I can just tell you in our area, it's huge. It's a big issue. So I was looking at it. I've got 82,000 businesses in my district alone, 82,020 that might be subject, not all of them, but some of them to that 43% bracket. But what's your thought on the 199?
My thought on 199A is it needs to be extended, period. It has been a lifeline for our pass-through businesses, which I just testified are 99% of my business clients. They're sole proprietors, They're partnerships, S corporations, all pass-through entities that can benefit from the 199A deduction. So I would say if the other important thing about 199A is it gives our small businesses and pass-throughs parity to the C corporations and the publicly traded companies. Their TCJA lower rate of 21% was made permanent, whereas the 199A was not. And I just think it is unfair to our Main Street businesses and our farmers to have this expire and, to your earlier point, pay upwards of potentially 50% in taxes when C corporations are going to be at 21. In fact, we will see a number of our pass-through entities contacting their lawyers and accountants to become C corporations. That's what business owners do.
I got cut on time, short on time, but that's one of the biggest issues is where's the fairness? I started out C corporation 40 years ago. Now we're in pass-through entities my kids run. But, you know, we're looking to go back to C corps if that becomes the reality. We don't want to, but that's where we're being driven to potentially.
Exactly.
So, but again, I just want to thank all our panelists today for your input. Thank you. I
Thank-
yield back.
Thank you. Mr. Doggett.
Thank you, Mr. Chairman, and thanks to our witnesses. I'm for a dramatic increase in corporate taxes. We have to increase taxes on the wealthy. For getting our guys' tax cut, we've got to cut spending, which they're going to resist. Where does the tax revenue come from? Corporations and the wealthy. And when they start squealing, we have a conversation. We're all partners in this. Everybody's going to take a little pain. Those are not my words. They're not a message from the Progressive Caucus, but rather the recent comments of Steve Bannon, sometime Trump advisor, and about as MAGA as you can get. He reiterated them this very morning. This committee has got to decide, will it maintain its traditional allegiance to the plutocrats or help working families, some of whom are represented here on today's panel? It's encouraging that for the first time, we see at least some elements of the Republican Party that recognize tax reality, that you just can't cut revenue and add without adding to the national debt, and you cannot just pour some magical dust on it, calling it changing a line, and ignore what you've done. Spiraling national debt has been something that some members of this committee have previously said was a national security crisis. Well, it's a crisis just as much if you do it through more tax breaks, more largesse for the billionaire class, for the multinational corporations that are paying a tax rate today that is a fraction of that paid by Main Street businesses and by most Americans. And there's further trouble for working families in the plans that Republicans are advancing. Only last week, President-elect Trump told Americans that on food, we can expect, quote, some pretty drastic price reductions. I think all of us would wish him well on that and eagerly await his fulfilling his promise, oft repeated, to lower drastically the price of food. Most economists, however, are concerned that his policies will have exactly the opposite effect. Indeed, the minutes of the last Federal Reserve meeting suggest that we may already be paying higher interest rates because of their concern that Trump will stoke inflation. This is especially true regarding his declaration that, quote, the most beautiful word in the dictionary is tariff, and it's my favorite word. Well, in Texas, a Trump grocery tariff tax, which he can impose as soon as next Monday, will likely increase grocery prices on most every vegetable and most fruits that we buy. Overall, Republican eagerness for a trade war that no one will win, beginning with the imposition of multiple Trump tariff taxes, a regressive form of taxation, and the resulting retaliation by other countries, and Republican reliance on tariff taxes to offset their tax breaks for the super wealthy, will continue to shift the tax burden to some of the very type of businesses that are represented on this panel. Indeed, one recent study found that if the tax breaks were combined with the tariff increase, that the impact would be that 80% of Americans would be in worse condition. And let's not forget that the last time retaliation occurred from Trump tax tariffs, that farmers had to be paid billions of dollars in welfare because of their lost foreign markets. Now, the impact of the 2017 Trump tax scam was to add about $2 trillion to our deficit, and now it's proposed that we add another $4 or $5 trillion. The effect on Americans is that 7.8% was the tax rate paid by the top multinationals in 1 year. Last year, the pharma industry didn't, as a group, pay any tax whatsoever. But meanwhile, a working mother with 2 children who was paid the average rate was paying a tax rate of 20%. That's not fair. And I'm glad that Mr. Bannon recognized it. I hope more of our Republicans will recognize that these large profitable corporations need to pay their fair share, and so do the wealthiest few in our country. The biggest loser of their plan overall will be our debt, but the impact that that has on the solvency of Social Security and Medicare and other investments is also very critical. So as we move forward, we need to consider all of these impacts and look for a tax code that is more fair for working Americans and less gift to those at the top. And I yield back.
Mr. Smith.
Thank you, Mr. Chairman. Certainly thank you to our entire panel here today. I think this hearing is very timely. It's important. I think it's always healthy to look back, see where we've been, where we need to go moving forward. I'm proud to say that the 2017 TCJA, Tax Cuts and Jobs Act, was a reflection and a result of several years of thoughtful exchange and really diving deep into what we could do at the time to grow our economy, create more opportunity, create more fairness in the tax code, I might add. And it was interesting. I think one thing that is left out of the discussion today, especially as we heard some testimony earlier, is that even Barack Obama, when he was president, realized that we needed to be more competitive on the corporate side and proposed a reduction in the rate. Now, a different rate than we ended up at, but Barack Obama, hardly even a moderate president, suggested we needed to be more competitive. He saw the inversions that were taking place over and over and over again that I don't think a score has ever truly reflected the damaging aspects of an uncompetitive corporate tax rate. Now, we can talk about this all we want and characterize this in different ways, but fact of the matter is, we were in a bad spot as a country before TCJA. And yes, had we only done corporate, that would not have been a good look. And as we hear here today, again, the impacts of what we did for families was very positive, without going so far as President Biden did with pushing more money, so much money out there, calling it tax relief, but it was just pushing money out there that triggered inflation. So I think it is incredibly important, and I believe we owe the American people a discussion, an exchange in sharing ideas and reflecting on reality, that we would shape policy moving forward in a productive fashion. And when I say productive, I mean with this process, but Ms. Silver very accurately, I believe, and appropriately described, and we sought out in 2017 on productivity for manufacturers such as Ms. Silver. Now, I think it was important that we were agnostic on size of a company so that everyone could benefit. But we knew that with increased productivity, if a business would see advantages in the tax code to adding new equipment, as Ms. Silver articulated, that the end result would be good for the company on a micro basis, but great for the economy as a whole as more U.S. companies became more productive and more profitable. Now, call me unreasonable, but I think profitability is a good thing. Profitability around this town is demonized so often. I think it's sad. And we owe the American people a better discussion than what we've been seeing way too often here. But I just think it's important to note that the thoughtfulness that went into 2017, I think there's a greater understanding these days that what we did in 2017 was the right thing to do, especially given the factors to consider at the time. And now looking backward, I'm proud to say we did the right thing. Now, we want to prepare for the future. What do we need to do to be more competitive moving forward? Let's look at that. But let's not ignore the successes that we had. Now, very briefly, sorry I've taken up so much time here, but Ms. Gallagher, I want to give you more time to elaborate, perhaps, on the value of permanence, whether it's a state tax, whether it's 199A, the value of permanence, and what that would look like, perhaps to an individual business or even beyond.
Thank you, Congressman, and good to see you. I came to your tax team meeting this summer and talked to you and your folks on this. So permanency, certainty and predictability is key for our small businesses and farmers. How can you plan without it? I think sometimes, or I was thinking of an analogy I could give you, but I know you all are very busy people. So imagine, if you will, getting your calendar or your schedule the morning of your day, not having any idea where you were going, who you were seeing, what you were supposed to say, what you were supposed to do until that morning. That's how I see this permanency and the need to do this swiftly for our taxpayers. They are in the dark, and I think certainty and predictability so they can plan is key. It could stunt economic growth and job creation without it.
Okay, thank you. Thank you. I yield back.
Thank you, Mr. Thompson.
Thank you, Mr. Chairman. Thank you for having the hearing, and thank you to all the witnesses. Before I comment, I just want to make one point about Mr. Neal's comments regarding the fires in California. I think it's really important to remember that we are the Congress of the United States of America, not red, blue, or otherwise. If there's a natural disaster or a horrific situation such as the people in Southern California are experiencing, as members of the Congress of the United States of America, we need to be all in to provide help, irrespective of where those people happen to reside. So, Mr. Neal, thank you for bringing that up. You know, we're going to hear a lot today, we already have, and I'm sure we will for the rest of the year, on how the Trump tax cuts delivered for working families. Let's be clear. The ones who benefited the most from these tax cuts were the rich, the very rich. Working families received pennies compared to the billionaires. And that's not the only misleading claim my colleagues on the other side have made about the 2017 tax bill. They claim to be champions of fiscal responsibility, while it was their tax bill that added $1.5 trillion to our national debt. Every economist, even the Republican ones, say tax cuts don't pay for themselves. Extending the TCJA would add almost $5 trillion to our debt over the next 10 years. And if you add all of President-elect Trump's list of tax cut promises, that number jumps up to about $16 trillion. The Trump tax cuts did not deliver for the middle class. A taxpayer earning $1 million or more received a tax cut almost 300 times greater than a taxpayer making $50,000 a year. The fact is, it was a Democrats' legislation that delivered results for economic results for the middle class. For example, the CHIPS and Science Bill, the Inflation Reduction Act, all contributed to increased domestic manufacturing. It wasn't the tax cuts. Since the IRA was signed into law, companies have announced over $130 billion worth of investment in clean energy and electric vehicle manufacturing. My friends on the other side of the aisle should go back home and see for themselves, because 85% of the IRA investments in new projects have gone to Republican congressional districts. And the 2007 tax bill raised costs for millions of our 2017 tax bill for our constituents by capping the state and local tax deduction. About an $8,000 a year tax increase to people in my district. Mr. Duke, Republicans claim that the TCJA is responsible for increased domestic manufacturing. Let's take EV manufacturing, for example. What have been the benefits of the EV credit, and what would happen if the Republicans repeal that?
So this isn't just an economic issue, this is a geostrategic issue. This strong industrial policy that, the Inflation Reduction Act's EV credits are an example of, are positioning U.S. automakers to catch up and lead in global manufacturing excellence. Firms have invested more than $81 billion in domestic EV and battery manufacturing since it passed. And it's helping close the investment gap with China, making the U.S. EV industry the most invested in EV industry on a per-country basis. These are the vehicles of the future. We can't let China, dominate that market.
Thank you very much. Ms. Silver, you were the past chair of the National Association of Manufacturers. You refer to that in your testimony. Do you agree with Mr. Duke on the importance of the EV tax credit and the Section 45X of our manufacturing sector?
I can't answer that question, but I certainly can follow up with you. I don't know about the EV tax credit to speak to it.
And the advanced manufacturing production credit?
I can follow up with you
Okay.
after this for sure.
Okay, thank you. Ms. Gallagher, you talked a lot about farmers, and you talked about certainty and predictability. Would you agree that if we really want certainty and predictability, and we really cared about our farmers, we'd take this tariff discussion off the table now?
Thank you for that question. I've not looked at how any tariffs would impact our farming community, so I'm not.
Well, we have experienced what they did last time, and you heard from Mr. Doggett how we had to bail out farmers because of those tariffs.
I know that my farming clients have benefited greatly from the TCJA provisions, specifically on the 199A, full bonus, and lower marginal rates, and the increased estate exemption has been a major benefits for my farming clients.
Thank you. Yield back.
Mr. Kelly.
Thank you, Chairman. Thank you all for being here and taking a day out of your lives to come and talk to people who've never really been in the private sector. I'm an automobile dealer. Second generation, my son's now running the store. My mother and father started in 1953 with absolutely nothing, a one-car showroom and about 6 service bays, and worked their tails off 7 days a week to make it profitable. I love people who have to make payroll. There have been several times, and we were doing TCJA to begin with, and Chairman Brady was talking about it one day. I said, actually, Chairman, there's 2 times in my life I paid absolutely no tax. And he looked at me and said, Mike, how'd you get away with that? I said, we lost money that year. Isn't it bizarre that we talk about where would the revenue come from? Well, we take a certain percentage out of people's profits, with the exception you can lose money and still be held up responsible for real estate taxes, wage taxes, every other single tax that every single American pays every single day. And we come here today and talk about the benefits of TCJA. Was it really true? Well, yes, it was true, because we actually garnered more revenue with TCJA than we'd ever seen before. And I can remember being there the day that vote was taken. It was the wealthy, the wealthy, the wealthy. They never get taxed their fair share. And all of a sudden we did TCJA, and all these wonderful, wonderful people who left America because America was being too tough for them came home. They hired people. They made investments. Certainty is absolutely the most important part of any business. I wish in the business I was in that there was certainty as to who it is that's going to be able to buy a car or truck from us tomorrow. A friend of mine by the name of Leonard Pintel, who was the mayor of our town, he said, Mike, you know what I would love to see? I would love to see that it was required that you have to actually survive in the private sector before you can go into public office and be paid on commission only and lost your job at least once. All of these wonderful talks that we have going back and forth about who benefits, who loses, who's paying it. I'll tell you who pays it. Companies that are profitable. Why did these companies that left America come back? Because of TCJA. Why did they leave to begin with? It's not because they didn't love America. They just got to the point they knew America didn't love them anymore. We would tax them out of existence and complain for them. It's like the little hen, right? Lay, hen, lay, and no golden eggs quit coming. And we said, what happened? The hen couldn't lay them anymore. If we go through all these different things and what we're going to do and what we're not going to do and how difficult it is, I got to tell you, please, please, give me a break. Give me a break. Ms. Silver, I've read your testimony. First of all, you've been through an incredible life. The loss of your husband. I can't imagine what that was like to go through. Ms. Marple, raising children. Ms. Gallagher, working with people. Ms. Couch, working with people. Look, do you know that in this entity, in government, do you know that during the height of COVID, we didn't miss one payday? I wish I could have said that about the dealership. We lost a lot of paydays. We lost a lot of paydays. But when you come down to TCJA and what were the benefits of it and where did we hurt people and who did we go after and all the rest of this back and forth. Listen, all of you, was life better under TCJA when we made that change and we did that tax change in 2017? Did America start to blossom again? Did the people seem to come back to America? Did we start paying more taxes because we had people making money and businesses being profitable? I mean, Silver, I know a lot of people that do what you do. This is a tough, tough business. But all of you, if you just please weigh in. I get so tired of people talking about tax revenue who've never had to worry about making a profit in order to pay taxes. If you can all, and I know you've all given your testimony today, and you took a day out of your life to come here, but Ms. Silver, I really was reading about what you do because I have so many people back home that do what you do and how tough it is. It's no bed of roses. You compete against a lot of people. So if you just please share more, because I got your testimony was incredible. And all of you, thank you so much. Ms. Marple, congratulations. Sounds to me like you're raising a wonderful family.
Well, thank you for your comments, Congressman. I could throw some color on this as far as how
Please do.
complex this is. So to take raw material and to transform it into a useful object that we all benefit from is extremely tough. There's a whole lot that has to go into that. We have to make, like I said earlier, have to make investments in our people, processes, in machining technology. And you're right, there's definitely years where you don't make a profit. But just, if you take this piece of paper, okay, and you slice this, let's say you slice this 20 times in width. If you take one of those strands of 20, that is the tolerance that we are holding on dimensions on parts that we manufacture. That's 2/10. You can't see that with the human eye. This is not me buying equipment, pressing a button, and a widget comes out. This is a ton of small businesses, like you said, in your district. And so we need pro-growth tax policies that are permanent, that are consistent, that are predictable to help us be able to grow, because our manufacturing supply chain in our country needs us. They need us to grow. They need us here.
Yeah, well, you know what? I appreciate your testimony. I think, the rest of the world keeps hoping that America will raise its tax rates again, because then they will see this group of people who were staying in America come back over and start their business with them. If we make it impossible to be profitable here, people will leave. They did it before, they'll do it again. We've looked at the greatest tax revenues we've ever had. This is not a Trump issue with me. It's not a red issue or a blue issue, as my friend Mr. Thompson says. These are red, white, and blue issues. If it's not for America, I don't care about anybody else in the world. If America is strong, the world is strong, the America is safe. Thank you all so much for being here. Chairman, thanks for having this. And let's go TCJA Part 2 and watch America rise again.
Thank you, Mr. Larson.
Thank you, Mr. Chairman. I thought you were going to say, let's go Notre Dame. You missed your opportunity there, but...
I left that out. Yes, go Irish.
Yeah, right. But thank you, Mr. Chairman, for this hearing. And I want to associate myself with the remarks of Mr. Neal and my colleagues. The witnesses have been outstanding. And when you listen to your testimony, I think you can see that there's a desire here on both sides of the aisle to help. But that help all comes down to fairness at the end of the day. And the quandary that Mr. Neal presented, I think, is one that this committee needs to sort through and have the conversation on. And the other thing that he talked about is that you just can't ignore the obvious in what's in front of you. And from my perspective as a ranking member on the Social Security Committee, we can't ignore the obvious. You think any of the witnesses, do you know the last time that we extended Social Security benefits in the United States? Anyone want to venture a guess? It's not a fair question to you. It was 1971. Richard Nixon was President of the United States. Could any of your businesses or households survive if the last time the responsibility, which is that of the United States Congress and this committee, to adjust Social Security, including the unfair policies of taxing your Social Security when you retire? I think the American people rightly no longer, we cannot ignore these issues. 70 million Americans rely on Social Security. And with 10,000 baby boomers a day becoming eligible for Social Security, that's additional 3.65 Americans becoming eligible every year. And we haven't extended benefits in over 50 years? That's an outrage. And when you look at its impact on people, more than 5 million Americans getting below poverty level checks, for about 35 million Americans in total, the only benefit they have is their Social Security that they paid into. This is an earned benefit, and the responsibility is that of the United States Congresses. I'm looking forward to working with Mr. Estes, and I believe my colleagues on the other side of the aisle care as deeply about this issue as we do. But we can't ignore it. Everybody cares about the national debt. Everybody knows that we're going to have to raise the debt ceiling, and we know that we have work in front of us. And yet when we talk about the fairness, where you see the disagreement is when you see all the money going in one direction and not even using capitalism's greatest tool for equity, Social Security. Make sure that that's the great leveler, including tax breaks for people on Social Security, including what parents get and what children get, what surviving spouses get. This is why these are important programs in a democracy, and why this committee, as the chairman started out today, talking about our importance and significance. No greater number than 70 million Americans that need a program addressed that hasn't been touched by Congress to enhance it in over now going on 54 years. I yield back.
Gentleman yields. Mr. Schweikert is recognized for 5 minutes. Thank you, Mr. Chairman. And for all of our members here, what we're doing actually is incredibly serious. Your country borrows about $70,000 every second. The cost of the expected additional revenues from taxing everyone more with the expirations at the end of the year would be about $15,700 a second. The scale of these numbers are terrifying. But as you'll notice when you hear the left and then the right going back and forth, we seem to cherry pick comments over and over that mathematically don't actually walk through the complexity. The fact of the matter is today's tax system is the most progressive ever. Rich pay a higher percentage of federal income taxes. Now, did they get benefits? Of course, but the fact of the matter is how many did we remove completely from paying federal income taxes? Then they still have their payroll taxes. Also, and Mr. Chairman, for submission to the record, I would like to actually put in a series of documents that show the best estimates are almost 70% of the corporate income tax benefits actually go to the worker. And vice versa. If you raise corporate taxes, about 70% is the mean, come out of the workers' wage growth. And look, I'm sure you were all with bated breath on the report from CBO last night. I hope that was a UC.
Without objection, so ordered.
All right, good, because I got a big stack for you. How many of you saw the CBO report that came out yesterday basically saying in 8 years or so, the United States has more deaths than births? This is more than just what we're going to extend in the expiring tax policies. The fact of the matter is the world we're dealing with today is different than those of us who worked on TCJA in 2017. A couple other things I sort of want to walk through. We have the reports, and it's been supplemented a couple times, CBO, but it's all very, very recent, that shows we maximize GDP growth and wage growth if we offset most of these tax extensions, because you don't bleed out the capital stack that's required, so you actually have lendable, borrowable money for your businesses. Well, that makes the world difficult. But a couple other things I do want to walk through here on both CBO and Tax Foundation charts, and this will also be submitted for the record, basically showing that if we had done the expensing, the series of research and development expensing, capital expensing, it actually has much less costs and actually equal to or greater than economic velocity than we did in the industrial policy of what was done with the IRA and the CHIPS Act, because it has a better distribution. Those dollars actually ultimately go where it maximizes investment velocity. And I'm sorry, but this is maybe the most important committee in the world. Can we get our basic economics and our math right? Because this is a big deal. You have a country, Mr. Chairman, that is now facing a movement around the world where government debt is up almost a full point since where we were in December. If we go to a 5 handle on U.S. sovereign debt over the next 10 years, that's almost $9 trillion additional borrowing to just pay for that. How does this committee produce policy that says we're not going to raise taxes on working people? We need our small businesses to hitting a new productivity curve, because that's how we survive. But at the same time, how do we thread the needle and communicate to the world debt markets that we're serious? Please don't keep raising our interest rates, because at this moment, where the interest rates are going, just that increase of going to a 5 handle is actually double the cost of extending all these tax provisions. Understand, if we don't get this right, the debt and bond markets are going to run this country, not us. With that, I yield back.
Gentleman yields. Mr. Davis, you are recognized for 5 minutes.
Thank you, Mr. Chairman, and let me thank all of our witnesses. You know, the 2021 child tax credit expansion almost halved child poverty in just 1 year. It pains me that the Republican-forced expiration of the 2021 child tax credit expansion doubled the child poverty rate in just 1 year. Yet here we are again, with Republicans advocating an average $78,000 tax cut for millionaires, while demanding that working families and seniors pay thousands more in tariffs and lost Medicaid, Medicare, food, student aid, housing, and Social Security benefits. The TCJA does nothing to help parents afford child care. In 2021, the Democrats' Family Care Credit Improvement took the benefit from $600 for one child to $4,000, and from about $1,200 for 2 or more children to $8,000. $8,000 is a lot better than $1,200. The TCGA does nothing to improve the Earned Income Tax Credit, to stop taxing low-income workers into poverty. In 2021, the Democrats nearly tripled the Earned Income Tax Credit and made critical expansions for younger workers, older workers, foster youth, and homeless youth. The TCGA fails to help these workers. The TCGA does nothing to increase housing insecurity. In fact, Mr. Duke mentioned that housing investment is lower today than below. Mr. Duke, as an economic expert, can you speak about how tax policies that support low-income individuals, parents, and workers strengthen families and boost our economy? For example, if we help parents without tax liability get up to $8,000 credit for their child care, like we did in 2021, or if we restored the 2021 Earned Income Tax Credit expansion, or if we created a new renter's tax credit, how would these benefits help not only these families, but the economy as well?
Absolutely. So we've got $4 trillion on the table, so that's like a lot to work with, right? And, you know, as I mentioned in my testimony, housing investment basically cratered after the law passed. And, you know, I suspect a lot of the reason why CBO found that growth went down after you extend the tax cuts is because housing investment gets hammered. It's a very interest rate sensitive sector. So I think a key thing is paying for whatever we're going to do to keep the deficit in check, which is going to, you know, keep housing investment going. On top of that, though, we do have room to make investments in families that directly benefit them. You mentioned a lot of them. I think the child tax credit was just an enormous success in 2021, you know, increasing the size, making sure working class families get, you know, the same tax credit that middle class families do. And again, you know, I think, you know, this committee oversees the largest affordable housing program that we have, the low income housing tax credit. That's an example of, I think, a better priority than, you know, a lot of what's, you know, in that $4 trillion, especially that $2.5 trillion for households making over $400,000. So I think the investments you're talking about, the child tax credit, the earned income tax credit, you know, making more support available to low-income renters make a lot of sense, while making sure that we have robust housing investment going by offsetting whatever extension happens by raising taxes on the wealthy and corporations.
Thank you very much. I thank you, and Mr. Chairman, I yield back.
Gentleman yields. Mr. LaHood is recognized for 5 minutes.
Well, thank you, Mr. Chairman. I want to thank all of our witnesses for your valuable testimony here today on this important subject that we're talking about. There was some reference earlier about the election and maybe the insignificance regarding the results of the election, or somehow this was not a mandate on what happened in the election. And this is our first full hearing really since the election. And I guess I look at the election results a little differently. If we were sitting here 6 months ago and I would tell you that Donald Trump would win all 7 swing states, that he'd win the popular vote, would win record amounts of African-American males and a record amount of Latino males, I don't think anybody would have believed us. But that was the results of what happened. And the other thing that never changed in the election, if you look over the last year, was 72% of the country thought we were headed in the wrong direction, based on the economy and immigration. It never changed. We're headed in the wrong direction. And you drill down on that, on the economics, and we've alluded to it here today, the insecurities and the anxiety that the American people had. Lower middle class people felt it. Devastating inflation, cost of living increases, lower wages, lack of economic optimism, and anxiety on living the American dream. And that was reflected in the election results. And so when we think about those results, that's the reality. That's the mandate we have to fulfill those campaign promises that we made on fixing the economy. What better way to do that than continue the Tax Cuts and Jobs Act from 2017? Go back to the Tax Cuts and Jobs Act, and again, we've talked about some of the results from that here today. I would argue, my 9 years I've been in Congress, it's the most important and most impactful vote that I've taken in voting for the 2017 Tax Cuts and Jobs Act, in what it did for the American economy. Created the best economy in my lifetime. You look at what it did to the economy: higher wages, record employment, record number of investment in small and medium-sized businesses. It created a booming economy. But even going a little further, we moved 6.5 million people out of poverty. People don't talk about that enough. It was the largest migration of people leaving poverty, leaving welfare programs to go into our economy under the Tax Cuts and Jobs Act. That's the reality of what happened. So why wouldn't we want to continue that, particularly with the election results we just had? I would also mention, on the international side, particularly what we did on GILTI and BEAT and the international tax provisions, we repatriated $3.5 trillion back to the United States. No one talks about inversions anymore. Pre-TCJA, companies were inverting all around the globe, going to other places. No one inverts anymore because of the changes we made, bringing that $3.5 trillion back to this country. Those are the tangible, real results that we had from TCJA. Now, I'll admit COVID got in the way of that growth path. I think we all admit that. But what better way now to continue that growth and get back on track with those real results than making these tax cuts permanent? And that's why we're really here today. So a couple things. As we begin, I just want to mention 2 goals that we should be accomplishing. One, we need to ensure that the tax cuts are preserved. And if we let them expire at the end of this year, the average taxpayer in my district would see a 22% tax hike in 2026. And I know that percentage is similar to a lot of other districts. This is simply unacceptable. And we need to work together to ensure that we're protecting the full gamut of taxpayers, whether they are individuals, working families, small businesses, family farms, and so on. The second goal, and I hope we can accomplish in addition, is extending the Trump tax cuts. And it's for us to consider the tax proposals that address some of the new challenges that we are seeing in the country today. There are common sense reforms already out there that address affordable housing, child care, and taxation of Americans living overseas. And I hope we can look to better support working families and ensure our tax code is more pro-growth and even-handed. Ms. Gallagher, I do have a question for you. My district that I represent in central and northwest Illinois, large number of family farms, family-owned small manufacturing companies. I wonder if you could talk, you alluded to it in your statement you made, about what can be done for farms and small businesses if we were to let the estate tax exemption be cut in half at the end of this year due to the expiring tax cuts. Can you talk about what that would mean to businesses?
Yes, and thank you for that great question. It will impact at least twice, maybe 3 times as many of what I say unexpected families. I think most are oblivious to potentially this estate tax exemption being cut in half. Many small businesses, yes, they do have advisors, and we do our best to advise our clients on these things. But the middle-class businesses are the ones who will be unexpecting of this and will not have, in my opinion, the time or money to hire the accountants and estate planners to develop the estate plan that can protect those assets. I would also comment that farmers in particular are most at a disadvantage. Manufacturers and companies are as well because they have very illiquid assets. Farmers in particular, their values of their land continue to increase. It's very valuable, but you can't just pull cash out of it unless you sell some of it, or there's no cash there to pay that estate tax. So it can be devastating to a family when they don't have the cash to pay that estate tax, and they need to plan.
Thank you. Ms. Sanchez, you are recognized for 5 minutes.
Thank you, Mr. Chairman. Before we begin, I want to just take a minute to discuss the fires that are still raging in Los Angeles. I did travel home this weekend, and while my district so far is safe, many of our friends and neighbors in Los Angeles, including those in Ms. Chu's district, are suffering. And they've lost everything in these horrific wildfires. And I have to say, it was apocalyptic and just heartbreaking to see firsthand the devastation. We've also seen, sadly, a lot of disinformation and lies that are being spread in attempts to score cheap political points. And I just want to remind folks that these are real people who are hurting, families who have lost everything, and they deserve better from our nation's leaders. In the weeks and months ahead, I hope that we can focus on ways to help these families recover, just as we have done for victims of other natural disasters across this country. But that's not what we're here to discuss today. We're here today because Republicans are attempting to renew Trump's signature tax scam that rewarded our nation's wealthiest at the expense of working families. Republicans say this hearing is about making the Trump tax cuts permanent for working families, but let's not forget what they really did. In 2017, they permanently cut taxes for large corporations, which allows them to continue paying less in taxes than ever before, forever. Republicans claim that those tax cuts would trickle down to everyone else, but slashing the corporate income tax rate only further line the pockets of millionaires, executives, and shareholders. Republicans love to claim that they're helping working families, but the fact of the matter is, under their policies, working families only get the crumbs. We need to chart a new and fairer path in tax policy. We should expand and make fully refundable the child tax credit like Democrats did in 2021, which cut child poverty in this country nearly in half. We should expand the earned income tax credit to reach the millions of low-income workers who work full-time but don't make enough to make ends meet. And we should increase the child and family caregiver tax credits to help our families manage their exhausting and expensive balancing act of working and caring for their loved ones. My Democratic colleagues and I recognize that investments that directly benefit American families yield much stronger returns than continually cutting taxes for the wealthiest in this country. Mr. Duke, can you explain what happens when our neediest families experience a drop in income from the death of a parent or a natural disaster, such as we've seen in Los Angeles, to their eligibility for a child tax credit that is not fully refundable?
Yeah, so I think a good tax credit that really supports families reduces income volatility. But we can see with the earnings requirement, the child tax credit kind of increases that earnings volatility for those low-wage workers, because if they lose their job, if they have to take time off to care for a new child, if a loved one dies, they have to leave the workforce, and not only do they lose those wages, but they also lose the child tax credit. That's getting hit twice from that. So I think, that's why full refundability is so powerful. And we know, look, this is America. Most Americans are connected to the labor market, right? And the ones who aren't, they're retired because they're a grandparent, they have a disability, or they're not in the labor market that year, but they were in the labor market the year before, and they're going to get a job after. It's really hard to get by in America without a job. So that's why full refundability makes the most sense.
Now, Ms. Marple said that, they rely on that child tax credit to get by, and that it should be for hardworking families like hers. Isn't it true that under the Republican policy, you can still receive part of that credit if you make over $400,000 a year for joint filers?
Yes, that's right.
And isn't it true that there is an earned income requirement under this Republican plan so that the poorest who don't even earn enough don't even get the full credit?
Yes, that's right.
Does that sound like we are helping that this tax policy that they're trying to push is going to help the neediest, hardest working families in this country?
No, it does not.
Thank you. Mr. Duke, as you know, nearly 80% of the tax cuts for individuals in the TCJA went towards white households who represent about 67% of American taxpayers. And the wealth of billionaires has nearly doubled since the enactment of the TCJA. Can you tell us how extending the TCJA is going to actually widen that racial inequality?
Yeah, absolutely. So America is a country where wealth is distributed very unequally, and there's a racial pattern to it. The 10% wealthiest white households hold 2/3 of the entire country's wealth. And so when we cut taxes in the way that TCJA did, that drives that disparity. And even more, again, we're going to have to pay for it somehow. We're going to do it through taxes on imported goods. We're going to do it through cuts to programs like healthcare now or in the future. So again, I think low and middle income families are going to pay that price, and that is going to drive those disparities.
Thank you very much. I appreciate all of our witnesses' testimony today, and I yield back.
Mr. Arrington, you are recognized for 5 minutes.
Thank you, Mr. Chairman. I can't imagine in any world that anyone from any political party would call what happened and transpired as a result of pro-growth policies a tax scam. You would have to have the fundamental belief that it's a scam, because that's not the American people's money that we're playing with here in Washington, that's actually rightfully the government's money, I think. Because there's no way to describe the lowest poverty rates in recorded history as a scam. There's no way to describe the results of the Trump tax cuts and the broader Trump economic agenda, deregulation, America First Trade, and the results of the highest capital investment ever, highest R&D investment ever, lowest unemployment rates for minorities and women ever. No repatriation of our jobs and businesses overseas, but repatriated capital, repatriated businesses, repatriated jobs from overseas back to the great US of A. Now, if that's a scam, as they say, I got some oceanfront property in West Texas to sell you. Everyone benefited. And those on the lower income spectrum benefited the most. Actually, the top 1% paid more. So it got more progressive in that sense. But all boats rose on the tide of prosperity as a result of good, low, competitive tax rates for our country and for our families. I guess my colleagues want to go back to when we had higher tax rates than communist China. What's pro-American about that? How are we going to unleash economic growth, job creation, and prosperity with that kind of tax rate? And we reduced it to 21%. We're not even in the top quarter of the most competitive tax rates. So I guess my colleagues want to go back to being the highest business tax rate in the free world. It makes no sense. The American people had the clearest contrast between my colleagues' policies and the associated effects on our families and our economy relative to the Republicans' policies and associated effects on families and the economy. We've never had a clear contrast between the two because we had total control when we passed TCJA. They've had total control for the last, not the last 4 years, but the 2 previous years. And
there's no comparison. Think about the last 4 years. We've had the worst, most regressive tax in 40 years called inflation on working families. We had $8 trillion in deficit spending. We had higher taxes, a barrage of regulations on our small businesses, our job creation engine. We stomped the production of domestic energy, the lifeblood of our economy, repeatedly with a whole of government assault. Why wouldn't we have experienced the inflationary firestorm and the cost of living crisis that is decimating families today? Why wouldn't we? With those failed economic policies and the reckless spending combined, we were paying people not to work. We were expanding welfare without even the reasonable common sense expectation that if you're able to work and you receive social services on behalf of the American people, that you ought to be looking for a job or working at least 20 hours a week. The American people were clear about what was on the ballot here. And they didn't want any more of the last 4 years. We could not have suffered any more. We need to lock in low tax rates for our families in relief, for heaven's sakes. What did they lose in their income over the last 5 years? And now what would happen? Let me ask a question in 15 seconds, Ms. Gallagher. What would happen to a working family if you put a $5,000 tax hike on them right now on the heels of the last 4 years of having inflation burn a hole in their budget, in their pocketbook? What would that do to them? You've interacted personally with them, so
Yes.
you can tell this story. I want to hear it, and I'm out of time. So can she answer that question, Mr. Chairman?
Quickly.
Please.
I'll be brief. They will tighten their belts, meaning they will have less money to put back into their households and into their communities, which will then stifle more economic growth. So it becomes problematic.
Especially when the credit card debt is the highest it's ever been, especially when consumer debt's the highest it's ever been, especially when we just added $3 trillion in consumer debt, especially when their APR went up by 50%. They're out of money. They don't have any more credit cards. I yield back, Mr. Chairman.
Sewell, you're recognized for 5 minutes.
Thank you, Mr. Chairman. As we review the Tax Credit and Jobs Act and its effects, I think we should be guided by a simple principle. The American people deserve a Congress that puts the American people's interests first, all of the American people's interests first, not just some. I can't think of a better place for this committee to do this than through an expanded and fully refundable child tax credit. We've had economists, academics, parents, guardians, and yes, even today, Ms. Gallagher as well as Mrs. Marple talked about the advantages of the child tax credit. The child tax credit has helped millions of children across America, including over 11,000 children in my Alabama district. It's not just expanding CTC that is important. It must also be fully refundable and timely received. To make the child tax credit fully refundable would allow many more families to take advantage of this crucial resource. We know that because in 2021, the Democrats and the American Rescue Plan gave more money per child and made it fully refundable, capturing millions of families who make very low wages, who may not file taxes, or who make no wages at all. I think that it matters how we structure the child tax credit, and I think that the way that we did it under the American Rescue Plan was the best way. We gave more money to children, and we gave more opportunities for their families to have better resources. Likewise, the CTC would have a more immediate impact if the child tax credit is paid in advance in monthly installments with the option of even depositing it directly into their checking accounts. People do not pay for rent or utilities on an annual basis. They pay for it monthly. Then I'm not sure why we would do the same for the CTC. I think it's really important that we are accountable not just to some of the American families, but to all American families. I can't tell you how many times I was stopped in the grocery store by many of my constituents during the American Rescue Plan 2021 year, and was told by countless parents how that increase in money from child tax credit and being given it monthly was such a huge advantage to them. They were able to get instruments for their children and better food for their children. And I think that we as an American people, if we're going to spend $4 trillion, get $4 trillion into debt, we can't do that on the backs of our working families and our children. We should be trying to figure out ways that we can be fairly distributing those resources. Now, another area that the Tax Cut and Jobs Act has negatively impacted is in limiting the ability of municipal governments and public entities to improve their communities, especially those underserved communities. Our tax code incentivizes these investments in providing tax credits and tax incentives to investors to invest in these communities. As a former bond lawyer, I believe we need to use all of the tools in our toolkit to make sure that we're revitalizing communities. TCJA repealed the advance refunding or the tax-exempt bonds that were advance refund so that many of these communities, these public entities and these governments couldn't take advantage of lower interest rates, so the borrowing costs went up. I think that there are many ways that we can actually effectively help more Americans and better use the $4 trillion that we're investing in expanding the TCJA. I also think that it's critically important that we look at expanding the Earned Income Tax Credit. Mr. Duke, you talked a little bit about that, and I'd like for you to elaborate on ways that we can literally, we talk about a rising tide lifting all boats, but the fact of the matter is we have an opportunity, if we're gonna open the tax code up again, to actually benefit more Americans. Can you talk a little bit about that?
Yeah, so low-wage workers without children are the only group that the federal tax code taxes into poverty or taxes deeper into poverty. That's just a policy error that we need to fix. So in 2021, with the American Rescue Plan, we tripled it. For these low-wage workers making like $14,000, $15,000 a year, these people are not making much money, but really, just, again, prevents the federal tax code from taxing them into poverty and deeper into poverty. These are workers, they're working as cashiers, as construction workers. It's doing the hardest work in this country, and, really, I think we should have a federal tax code that values that work instead of insults it.
Well, thank you. And Mr. Chairman, I just want to say that if we're going to actually look at our tax code again, I really would hope that the Republicans will work with us on structuring this child tax credit, the Earned Income Tax Credit, the low-income housing tax credit, as well as new market tax credits and advance refundings so that we can truly, broadly affect all Americans. Thank you, and I yield back the balance of my time.
Mr. Estes, you are recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to all of our witnesses for being here this morning for our first hearing of the 119th Congress. We have so much important work to do for the American people, and I'm glad we're starting with this critical issue of pro-growth tax reform. Before I get too deep into my remarks, I wanted to briefly discuss an op-ed that I wrote for the Telegraph. I'm deeply concerned that the OECD is working very hard to finalize Pillar 2 guidance before the change of administrations next week. My House Ways and Means colleagues and I have long warned that the Pillar 2 agreement, which mandates a global minimum tax, implements a UTPR provision, and unfairly treats U.S. tax credits, is detrimental to our country's tax sovereignty, to American ingenuity, the federal treasury, and our national economy. Our allies will be best served by partnering with the incoming administration, not the one halfway out the door. Mr. Chairman, I ask unanimous consent to submit this op-ed for the record.
Without objection.
For the past 4 years, the Kansans I represent and Americans across the country have suffered under historic inflation thanks to the damaging policies of the outgoing administration. Kansans need economic relief, and the Trump tax cuts are a surefire way to deliver it. It's pretty simple. Without the Trump tax cuts, taxes on nearly every American will go up. The average taxpayer in Kansas will pay over $2,200 more in taxes if the Trump tax cuts are allowed to expire. But by extending the 2017 tax cuts, we will avoid this tax hike and allow Americans to keep more of their hard-earned money. By making the Trump tax cuts permanent, will do more than just provide sorely needed relief to individuals and families. These tax cuts also help the businesses and innovators who create and sustain countless jobs in communities across our country, leading to job creation and economic growth. We can't go backwards from the growth that we've gotten out of 2017 to lose all of these benefits. Key to this success was the immediate R&D expensing provision. After the Trump tax cuts, R&D investment grew by 18%, amounting to over $2 trillion in new facilities and activities. Extending immediate expensing for R&D would generate over $70 billion in new investment and support over 21 million jobs. We also have the advantage of knowing how beneficial immediate R&D expensing is, as we've had 3 years to see the damage and hardship that happens without it. Since immediate R&D expensing expired in 2022, we've seen investment in R&D drop from over a 6.5% increase each year to less than 0.5% per year. That means we have less economic growth, fewer jobs for American workers, and less tax revenue. In the recent jobs reports, we've seen some job growth, but not manufacturing jobs. We're competing globally for jobs and investments, and without immediate R&D expensing, we risk again losing good innovators, jobs, and dollars to other countries like China that are instead choosing to incentivize R&D investments. We can't afford to fall behind on the international stage this way. I also want to highlight that, as mentioned earlier, that in January, the House of Representatives showed it's possible to find consensus on this common sense pro-growth policies by passing the Tax Relief for American Families and Workers Act. Not only did this legislation pass, but it passed with huge bipartisan support, 357 to 40. Given the American people's desire for change in our economic trajectory, I'm hopeful that this committee and this Congress can once again come together to deliver meaningful tax reform that will boost the economy and allow Americans to keep more money in their pocket. Ms. Silver, some people wrongly conceive of the business provisions in Trump tax cuts as handouts or special treatments for business. Can you share how business provisions like immediate R&D expensing allowed you to reinvest in your business to support your employees and customers?
Sure. Thank you for the question, Congressman. You know, manufacturing is a total team sport. So this expired R&D tax provision has affected my customers and it's affected my suppliers. So no matter what your size or structure of your business, we are affected by this. And I can give you an example. I run my entire business on a software, on an ERP system it's called, and the company that has built that software is in Texas, and they were dramatically affected. Their tax liability went up by a lot after this R&D tax provision expired, and so that's less, they have less ability to reinvest their profits to create new jobs, to innovate the product that I use every day to run my business. So there's a ripple effect definitely to me.
Yep.
And that's just one example.
That's right, and we're hearing it over and over with different, because of the cash flow cost and not being able to write off that expenses on their taxes, that you're not getting the benefits and therefore your customers aren't getting the benefits. So thank you, and unfortunately I'm out of time. I've got more questions, but I'll yield back, Mr. Chairman.
Ms. Dobeni, you are recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank all of our witnesses for being with us today. I also appreciate that so many of our witnesses have highlighted the benefits of expanding the child tax credit. When Democrats expanded the child tax credit in 2021, child poverty was cut nearly in half, with the credit reaching over 65 million kids. The Republicans' version of the child tax credit leaves out 1 in 3 children, especially the ones who need it the most. And when Republicans let the expanded child tax credit expire, child poverty more than doubled. This data, and there's lots of data, underscores the importance of expanding the child tax credit beyond what was done in the TCJA. Republicans are focusing on all the so-called good things from the TCJA, when in reality we have spent the last 7 years trying to fix the many mistakes that they made. For example, Republicans made changes to the R&D credit to help pay for their $3 trillion bill, making it more difficult and expensive for businesses to invest in R&D. We have a chance to meaningfully help families and small businesses by reforming our tax code. But Republicans instead are moving full steam ahead with plans to spend trillions upon trillions on more Trump tax cuts for the wealthy and well-connected, leaving working families to foot the bill. Even worse, Republicans say they want to partially pay for these tax giveaways by cutting Medicaid and Medicare, which provide basic health care to low-income families, people with disabilities, and seniors, gutting critical investments to combat climate change, and imposing across-the-board tariffs on imports, which economists estimate would raise prices on the average American household by thousands of dollars per year. This means higher costs at the grocery store, gas pump, and pharmacy counter. And these negative impacts will get even worse when our trading partners retaliate by cutting off access to their markets or blocking essential goods like critical minerals from coming into the United States. Mr. Duke, can you discuss the regressive nature of tariffs and what the likely impacts are, or what impacts would be of Trump's tariff first trade proposals? Let me turn that one over to you.
Yeah, absolutely. Tariffs are our most regressive form of tax. So, for example, Treasury assumes the bottom 90% of Americans only pay about 20% of the total individual income taxes that are paid. They pay about 30% of corporate taxes, but the bottom 90% pay more than half of taxes on imported goods. These numbers actually understate the regressivity of tariffs because they don't actually account for the fact that low-income people spend their entire income in a given year just trying to, make ends meet, while millionaires can save their entire income. So our income tax code does a good, if imperfect, job of creating progressivity by taxing high-income people at different rates than low-income people. Tariffs can't do that. Tariffs still have a role to play as a targeted trade tool, protecting strategic industries based on national security, industrial strategy, and resilience. But the more industries you apply that to, the less effectively we accomplish those aims. And when we're using it as a revenue tool 20% across the board, we're essentially talking about a national sales tax. It's the most regressive way to raise revenue.
Thank you for that. I also wanted to talk a little bit about the IRS. Republicans claim to be concerned about the nation's deficit, yet they continue to advocate for and enact policies that increase it. For example, Republicans continue to target the IRS and have rescinded $20 billion of the $80 billion from the Inflation Reduction Act to help make sure that folks are paying their taxes, especially the wealthiest are paying their taxes. Mr. Duke, can you speak to how cutting IRS funding impacts the deficit?
Yeah, sure. So the bulk of that IRS funding was dedicated to hiring more staff for stepped-up enforcement of existing tax law and, frankly, modernizing a 20th century technology that was at the IRS. And the Biden administration focused those enforcement efforts on auditing the wealthy and corporations. The funding is extremely effective and pays for itself multiple times. CBO estimates that a $1 cut to IRS funding will raise the deficit by $2.50. One last thing I'll note, IRS funding is a critical part of our law enforcement apparatus. Tax enforcement is how we caught Al Capone. I don't understand why we would let terrorists and money launderers and fentanyl dealers off the hook by cutting IRS funding.
Thank you for that. And thanks again to all our witnesses for being here. Mr. Chairman, I yield back.
Mr. Smucker, you are recognized for 5 minutes.
Thank you, Mr. Chairman. I'm glad we're holding this hearing. I think as we engage on implementing tax policy over the next few months and year, it's very important to understand the impacts of the TCJA and the impact that had on the economy and on the American people. And we're hearing again some tired arguments today about the TCJA that are just simply false. We've heard that the TCJA made the tax code more progressive. That's false. We heard that the TCJA benefited the rich at the expense of middle-income America. That is false. And I have, Mr. Chairman, a chart from the IRS that I would like to submit into the record.
Without objection.
And I'd like to explore a little of this here today. This is essentially a chart comparing, it's directly from the IRS, 2017 tax returns filed compared to 2018 tax returns filed. And there's some striking results here. The Tax Cuts and Jobs Act, 2018, of course, the first year the Tax Cuts and Jobs Act went into effect, reduced average effective income tax rates for filers in every one of the IRS's income tax brackets, every one, with the largest benefits going to the lowest and middle income households. So, for instance, in the $40,000 to $50,000 income range, there were about 12 million returns. The average tax paid by them was reduced by 18%. In the $10,000 to $15,000 range, the average tax rate paid was reduced by 71%. As opposed to the top 1%, they also saw a reduction, but much, much less. They saw a reduction of less than 5%. So the benefits most certainly accrued to the lowest income earners, and everyone, or every class at least, maybe not everyone within that class, but every class saw a reduction in their taxes paid over their taxes in 2017. We also saw, of course, the poverty level reach the lowest ever in the history of the country. So the poor were lifted out of poverty. One of the interesting things of this chart as well is that we saw upward mobility as the result of the Tax Cuts and Jobs Act. So, for instance, the number of individuals in the $1,000 to $25,000 earnings bracket was decreased by more than 2 million filers per year. So that many people moved up in their earnings. And the highest increase in earnings, over 1 million filers, was in the $100,000 to $200,000 range. They essentially moved up from the lower earnings and were earning more and paying less taxes. So, you know, the American people didn't believe Democrats last session when they said this, you know, when they looked at how they felt after 4 years of the Biden administration compared to 4 years of the Trump administration. They understood that the Tax Cuts and Jobs Act benefited them. They saw the impact on their pocketbooks. They understood that their real wages had gone up about $6,000 annually compared to a reduction of real wages after inflation with the Biden administration. And they told us they understood that in the election. So, you know, to the Democrats on the committee, they didn't believe you last time, and they're not going to believe you now. So what I'd suggest is that we find ways to work together, because I do agree that there's a number of things I heard from the Democrat side of the aisle here today that I agree with, and one is I'm concerned about the debt. And we ought to be sure that when we're doing the extension of these tax cuts, that we are implementing policies that grow the economy. You can't change our fiscal trajectory that we're on, which isn't going to end well, without strong economic growth policies, and I think we could agree on a lot of that. And then otherwise, we should have corresponding cuts in spending to offset the costs of any tax increases or tax extensions that are not covered with additional revenue through economic growth. So I think there's a lot of areas for us to work together. We should do that. We should do what's right for the American people. But these tired arguments about what happened with the Tax Cuts and Jobs Act, as I said, they didn't believe you then, and they're not going to believe you today as well. Thank you, Mr. Chairman.
Ms. Chu, you are recognized for 5 minutes.
The Republican tax bill provided a gigantic tax cut for corporations from 35% to 21%, leading to billions of dollars of profits for them. There were no conditions for this money. This bill gave a top tax rate cut for millionaires and billionaires from 39% to 37.5%, giving them millions and millions of dollars of profit. There were no conditions for this money. And yet, I have just returned from my district in Southern California, which has been completely devastated by the Eaton fire, leaving it an apocalypse. In Altadena and northern Pasadena, the fire has destroyed over 7,000 structures, left 20,000 people homeless, burned schools and businesses and community institutions to the ground. First responders have found 16 people who lost their lives and expect that number to rise. Thousands of people have lost their homes and a lifetime worth of belongings and memories. And yet, scores of Republicans, led by President-elect Trump and Speaker Johnson, are already threatening to place conditions for a disaster assistance to these victims. I invite any Republican in Congress who's entertaining these demands to visit my district, see the devastation for yourself, and look the victims in the eye when you tell them they don't deserve help from their country because you disagree with certain policies passed by their state. This is the United States of America. We help our citizens when they fall victims to a natural disaster, regardless of their political party or opinions. And we do it without strings attached, just like we did in December for victims of Hurricanes Milton and Helene. I bring this up because I have not heard a single Republican suggest that the trillions of tax cuts for the wealthy they're proposing to make permanent should be conditioned or come with strings attached. One thing is for sure, we should not impose conditions for helping people at the absolute lowest time of their lives. And now I'll turn to another subject. Mr. Duke, I've noticed that you'd written some pieces about pass-through entities for the Center for American Progress even before the Trump tax law passed. As a longtime member of the Small Business Committee, I'd like to ask you about the $199 Cap A deduction. I believe one of the major myths of the Republican tax bill is that it helps small businesses through this $199 pass-through. Actually, there is no size restrictions for the size of the business taking this deduction. And in fact, the largest businesses can take advantage of the deduction. So, Mr. Duke, are all pass-through deductions small businesses? And can you talk about the kinds of taxpayers who benefit from this deduction and whether it's an effective way to support the smallest businesses in this country?
Yeah, so no, not all of the businesses that receive the deduction are small businesses. It goes to big companies generating millions of dollars of profits. They have pass-through status and they can, collect the benefit. And according to JCT, more than half of the benefits of this deduction go to millionaires, people making over $1 million each year. Rich people are both more likely to have pass-through income, and the structure of the deduction makes it mechanically larger, the benefit larger for high earners. So, again, the deduction, doesn't do anything for a business without profits like a startup, and its value goes up the higher a family's income is. So by design, it can go to wealthy real estate investors without any employees. I think there's a lot we can do to help startup businesses, including expanding the size of the deduction for startup expenses, to $30,000 or $50,000. And a key thing for small businesses and startups is they borrow money, so interest rates matter to them, which means that making sure that whatever we extend, we pay for to keep those interest rates low.
And in fact, the pass-through deduction provides for the wealthiest 10% of taxpayers a 3,000 times larger benefit for taxpayers than those at the lowest 20 percentile of income. Thank you. I yield back.
Thank you. Mr. Hearn.
Thank you, Mr. Chairman, for having this very important meeting. Mr. Duke, I'd like to ask you a question that the witnesses sitting next to you that take risk every single day, that employ people, that sign both sides of the paycheck, that many times don't get paid. Are you in business? Do you hire employees? You create jobs? And so you don't think that 199A is important at all to anybody?
I'm not. I think that how we pay for things matters. So if we can find a good offset for it, maybe that's something we can discuss, but how we pay for things matters. I think you and I can agree that the deficit is not on a good trajectory.
Well, it's not been on a good trajectory for about 50 years, so we could talk about that for a long time. Like my colleague to my left here, who's also a business person, we're concerned about it. We're concerned about frivolous money. I mean, there's a belief that we should just tax everybody 100%, and we get to decide where the money goes back. I don't think you agree with that. And I think at the end of the day, we have to respect the idea of when people take risk and try to create jobs and put Americans to work, they're doing that for the independence, the liberties, the freedoms that those individuals, workers can to enjoy, and so they don't have to depend on the federal government. So before coming here and still here, I've been 40 years in business, from starting as a single person in business to creating jobs, 1,200 jobs at my highest before I started selling my restaurants, but in the manufacturing world, in technology world, I've seen this as a small business entrepreneur for my entire life. Grew up in poverty. If not for the opportunities in the United States of America, for the opportunity to take risks and create jobs and help people go to work and experience that same opportunity, I wouldn't be here today. That's what these folks are doing. That's what they're talking about. And I would like for you to share with us where only the rich are benefiting from the tax cuts. Because everything that I read, both liberal, left of center, right of center, hard right, no one says that. When you look at it right now, the top 1% pay 26% tax rate. The bottom 50% or 5% pay a 3.3% rate. So I hear it's not dollars for dollars, and that's how you guys try to make this thing sound so evil. But the reality is there's being more paid at the top today than there was prior to 2017. Before I got here, I wasn't here in 2017. But as these folks have said and want to say to you, but they can't ask you questions, certainty is important. And we're getting ready to see the largest tax increase in American history starting in January of 26 if we don't do something. And we've got to figure out if it all needs to go through or if the entire package or what needs to be fixed, modified, adjusted, added to, so that we have the greatest country in the world for creating jobs. It's talked about the 21% corporate rate. And I'm speaking directly to you because the information you're sharing to the committee is what they're asking you the questions on to validate the things that they're saying. The 21% rate in the United States of America, when you add the average state rate across the United States, is at 25%. Our greatest adversary in the world economically, nobody else is even close, is China at 25%. Do you think it's smart business practice for the global economy for us to be one of the higher tax nations in the world?
I don't think it's a good idea to borrow money from China.
I asked you a question.
I
I didn't ask you about that. China has a whole different way. I said, you think it's smart business practices to be the highest tax nation in the world when it comes to global competitiveness?
It matters how these things are paid for.
Do you think China worries about that?
I mean, they lend money to us. They don't have that problem.
They're lending less today because they understand the importance of what we're doing. Do you remember in 2017, again, I wasn't in Congress, but I was an observer from the outside, wasn't even running for Congress. When the 21% corporate rate was lowered, the other nations around the world lowered their rate so they could remain competitive with the United States of America because they were afraid of what was happening was going to impact them, and it did. The 4,000 inversions before 2017, we've had zero since then. No one argues that. No one is talking about the impact of the tax rate. It did change the hearts and minds of America. It did. And it created corporations here. They didn't leave anymore. They didn't go buy companies from somewhere else and relocate their headquarters. The 199A, it puts a parity between small business pass-throughs and C corporations, of which 95% of the businesses in America are pass-throughs. Are there some larger than others? Absolutely. Are we going to be punitive to those people who have fought and grown their businesses from one person, as I did, to 1,200 employees? Are we evil because we created jobs? Okay, so why aren't we sitting here saying, yes, what's the percentage of people, the businesses in America, that you think you're so disgusted with that are getting 199A pass-through deductions as compared to somebody that's got one person?
I'm not disgusted by anybody receiving 199 Cap A. I would love to cut taxes for businesses, but it's a question of how we pay for it. Are we doing it through taxes on imported goods? Are we cutting Medicaid? Those things matter too.
Mr. Chairman, I've run out of time. I yield my time back.
Thank you. Mr. Boyle.
Well, I'd like to thank the chair and the ranking member, as well as all of my colleagues. It is indeed a pleasure to resume my service on the Ways and Means Committee. I'd also like to thank all of the witnesses for being so generous with your time and taking now 3+ hours out of your lives in order to testify. You are proof of the wisdom of the old saying, no good deed goes unpunished. So I'm sorry you've had to listen to us for the last 3 hours and probably still have some time to go. I do want to return to the history of 8 years ago, because it's often said that history doesn't repeat itself, but it does rhyme. 8 years ago, the very top priority of then President Trump and a unified Republican Congress was the so-called Tax Cuts and Job Act, which, according to the nonpartisan Congressional Budget Office, showed 83% of the benefit went to the richest 1%. No wonder that in the entire history of Gallup polling, the only poll to register majority voter disapproval as opposed to approval was the TCJA, and it wasn't just one poll. Poll after poll showed only about 40% of the American people supported the Trump tax cuts, while a majority, somewhere in the mid-50% range, opposed them. The wisdom of the American people was proven to be right. That added $2 trillion to our national debt. So now that it's 8 years later and they're set to expire, the question is, how much more debt would this policy add? The CBO, again, released a report in May, and they've testified before the Budget Committee, another committee on which I serve as ranking member. They showed in their report the full extension of the TCJA would add $4.6 trillion to the national debt. So for the last 4 years, I keep hearing from a number of my friends on the other side of the aisle how concerned they are about deficit, how concerned they are about debt. I do tend to notice that whenever there's about to be a Republican in the White House, we tend to hear a lot less concern about deficit and debt, and the top priority is always tax cuts for the richest 1% of Americans. Now, Mr. Duke, let me, with a great first name, let me turn to you, Brendan, and ask you, do tax cuts pay for themselves?
No.
And the $4.6 trillion figure that the nonpartisan professionals at the CBO found, which is also similar to analysis done by the Wharton School and by other nonpartisan groups as well, does that sound approximately the right number?
Yep.
And you are familiar with some of the other reports and analysis that has been done by other groups? They're all approximately in that $4.5 trillion range, correct?
Yep, that's right.
So it is fair to say that if we fully extend the TCJA, we will be adding at least $4 trillion more to the national debt.
That's right.
Now let me turn to tariffs. Tariff is another word for tax, is it not?
That's right.
So if President Trump follows through on his promise to do wholesale tariffs on imported goods, that would be, in reality, like a national sales tax on anything that we get abroad, correct?
That's right.
It's funny, it seems to me that one of the big drivers of this past election was dealing with the global increase in inflation, a problem that wreaked havoc all around the world, from the Baltics and Germany through the UK to Canada, the US, Asia, started in 2021 once economies began to get back into full swing after the COVID pandemic and that we had to restart supply chains. Would tariffs make goods less expensive for the American people?
Absolutely not.
In fact, tariffs would make goods more expensive for the American people.
That's right.
Thank you. With that, I yield back.
Thank you. Ms. Miller is recognized.
Thank you, Mr. Chairman, and thank you all for being here today. I don't think there's a more appropriate way to kick off the 119th Congress and the Republican leadership than to discuss the great success of the 2017 Trump tax cuts. And I'm so thrilled that we have a strong leader who understands business and the economy and the mandates, et cetera. So he's back in the White House, and I think that's a wonderful thing. American voters have given Congress and our president a mandate to make permanent the great work that was accomplished in 2017. And it's up to the members of this committee specifically to ensure that these policies are made permanent for our working class families and small businesses to thrive. I'm a West Virginian, and we know small business because 98.9% of our businesses in my home state are considered small businesses. The 199A small business deduction created in the tax cuts was transformational for the hardworking small business owners in my district. The small business deduction allows pass-through entities to receive tax rates comparable to larger corporations, allowing those small businesses to stay competitive and to reinvest in their employees and their community. Last year, we had Michael Irvin, who's the founder of and CEO of the Coal River Coffee Company in Charleston, West Virginia. And he came and testified before this committee about how his business has been able to utilize the benefits from this deduction. And I've stayed in touch with him since then, and all the work that the Coal River Coffee Company has been able to do for his workers and the community in the district, thanks to the 199A. The business has been able to provide raises, promotions, purchase new equipment, label making, train their new coffee roasters, and they were also recognized with the 2024 Small Communities Big Solution Award for revitalizing communities across West Virginia. This type of growth helps small businesses level the playing field with the bigger corporations, and it's happening all over my state. Workers and businesses alike are much better off because of the 199A. And I look forward to extending this policy as part of our efforts this next year. Not only does Congress have the opportunity to make permanent the 2017 tax cuts this year, but we also have the opportunity to provide additional relief for working class Americans that were harmed by President Biden's disastrous economic policies. One such policy was the 1099K reporting threshold. In the misnamed American Rescue Plan Act, the 1099K reporting threshold was changed from the time-tested standard of $20,000 and over 200 transactions to $600 over a single transaction. As a result, Americans using eBay or Etsy to sell or resell products or Venmo to collect rents are now considered small businesses and will be sent a 1099K form this upcoming tax year. Since this disastrous policy was signed into law, the Biden administration's IRS twice delayed implementation and last year illegally changed the thresholds without congressional authority, all because they knew how catastrophic the policy would be for the average Americans and the gig workers. My bill, the Saving Gig Economy Taxpayers Act, to restore the 1099K threshold to the pre-ARPA levels, was co-sponsored by all Republican members on this committee and favorably passed out of this committee last Congress. So I look forward again to introducing that legislation to fix this problem that the Biden administration created to provide relief for the working class Americans. Ms. Couch, you help small businesses and individuals understand these onerous 1099K reporting requirements. Can you speak to how difficult it's been for taxpayers to understand that the new thresholds amidst the uncertainty from the Biden administration?
Thank you for your question. Yes, these thresholds are requirements that are very burdensome for small business owners who already have a lot of compliance requirements that they must do on a regular basis. There will be a good bit of confusion in our industry professional opinion that folks won't be able to understand the difference between personal and family payments through Venmo, for example, versus a payment to an actual small business owner. And there's the potential for people to receive 1099s that should not be receiving them. So that's another concern as well. We would really like to see these thresholds move in the opposite direction of where they're headed now. And we appreciate your work and bill that you've done to help small business owners on this matter.
Thank you. I yield back.
Dr. Murphy.
Thank you, Mr. Chairman, and thank you for putting together this meeting. The greatest existential threat to the United States is our debt. We're in I'm not an economist by trade, but reading and researching, this is what's going on right now. Having sound tax policy that allows us to bring in revenue, grow our country, is critical. Is everything perfect with the TCJA? In my opinion, no. Are there a lot of good things? Yes. It grew our economy, it grew people out of poverty, it helped in every single demographic possible. You know, I hear the phrase so often that they are, quote, not paying their fair share. Mr. Duke, what percent do the top 10% pay in taxes?
What, could you repeat the question?
Of the top 10%, what percent of taxes do they pay? 76%.
Oh, okay.
Just to give you the answer real quick. The top 1% pay 45%. The lowest 50% of income earners, what percentage of taxes do they pay? 2.3%. You should know these numbers. I know you know these numbers. You know, the Biden administration, through the Pillar 2, I'm glad one of my partners or colleagues brought that up, is trying to give our taxpayer dollars away to other countries. You know, Ireland, to try to grow their economy, guess what they did? They cut the corporate tax rate, and guess what happened? Companies went to Ireland because they paid a lower tax rate. And guess what companies and businesses do? They employ people. Imagine that. What a novel concept. And what do some folks want? They just want more money for the government so the government can employ people. It's good to have people who have run businesses. A lot of the folks on this side of the dais have. I did it in a medical practice, and we didn't get a chance to raise our prices. We had to make sure that we knew where money was coming from and how money was spent. So, you know, I just get irritated. I have to be very frank and say that folks who talk about business policy who've never run a business know what the hell they're talking about. These are folks who are sitting here who stay up at 2 o'clock in the morning on Saturday night trying to figure out how they're going to meet payroll. You know, Ms. Silver, I'm giving my most sincere condolences to you on the loss of your husband. I went out and toured a sweet potato farm that went through, you know, generations upon generations. And now we have the estate tax that is come due, that would drop, that would plummet. How does that work with your family? What things would you have to face if that were to occur?
In 2014, it could have definitely drastically affected us, the expiration of the estate taxes. You know, my husband was the sole shareholder and owner of Ketchie, so upon his passing, it went to me. And I don't know if I would have continued on with his legacy if I would have had this large looming tax bill ahead of me. And I'm in a very capital-intensive business, which I kind of described earlier. So a lot of time, we don't have the liquidity in the business to pay such a tax, like an estate tax, upon someone's passing. And I really view it as double taxation. I've already paid taxes on my assets. I've already paid taxes on my business, on my income.
Yeah, so absolutely. And this is the hard part about America. I think there's just an absolute theological difference on how we run our economy. How do you give people a life that's worth living, esteem, a reason to get up in the morning? You get them a job. You give them something to create. You give them something to accomplish. And we should be creating policies that allow us to grow rather than create dependence. If you look about reform, if we talk about any of the type entitlement programs about reform, it's not about giving money back so people will stay at home. It's about giving them a productive life, going in, growing a job, maybe even having a business of their own someday to employ people, make decisions, make payroll, and God forbid they actually had some extra money left over that they would actually reinvest in their business to grow their people, and guess what? You would employ more people and educate more people. We get into this maelstrom of codependency upon the government check rather than one that you do through your own efforts and energy. This is what our tax policy should be burdened for. I'm happy to work with Democrats. TCJA is not perfect. I'm just going to say that. I wasn't here at the time. It's not perfect. But it gives us a policy that allows American business and innovation to grow, employ people, give them a meaningful life, and at the same time, I'm going to go back to my original statement, help us cut our deficit. Thank you, Mr. Chairman. I'll yield back.
Thank you, Mr. Byer.
Mr. Chairman, thank you. And thank all of you for hanging in there with us. I'm fascinated, want to build on things my good friend Dr. Murphy just mentioned. You know, I've too, a business owner on this side, 46 years running the family business. And so I very much appreciated the bonus depreciation, the interest deductibility. I think 199A was essential when we cut the corporate tax rate to 21%. Otherwise, every sub-S or LLC or partnership would be fleeing to become a C Corp. And I think that we have seen significant small business growth because of that. However, this notion that the corporations were overtaxed, yeah, we dropped the rate to 21%, which is the lowest it's been in 100 years. When I started my family business, it was 78%, and we were still profitable. Now it's 21%, but the effective rate, according to the Peterson Institute, the foundation, which is a very Republican thing, said the effective rate was 9% in 2018, the last year for which they have statistics, 9%. So, and if you look at corporate taxation as a share of GDP, it's 1.6%. That's, I think, the lowest in the OECD. Things like Canada, 5%. So our corporations are contributing relatively little to the tax dollars overall. But the fundamental point I want to make is back to Dr. Murphy's notion of fair share. I would argue that we don't look at what percent of the tax revenues come from the 1,000 billionaires. It's going to be a lot. They're billionaires. But rather how much they have versus how much the rest of us have. Our income inequality and our wealth inequality is the worst it's been in at least 100 years, 1913, 1915. We saw this in the last election when so many people couldn't figure out how to make ends meet, and that they fled to a different president, hoping that he could somehow solve that problem. The problem isn't that and by the way, it's not about entitlements. I totally agree with my Republican friends. It's about work that pays. We have so many Americans working full-time, 1 job, 2 jobs, 3 jobs, that can't pay the rent. They can't make a car payment. They can't pay for childcare. I had the honor of serving in Switzerland for 4 years, and when I left in 2013, the minimum wage in Switzerland was $48,000 a year, way, way higher than it is here. And that was a long time ago. As a consequence, there's virtually no poverty. There's also virtually no entitlement payments. There's none of this takers and makers it developed. So what we have now is a significantly undertaxed, very wealthy class, the 10% and up, and not a lower class that's overtaxed, but rather a lower class that's not given the job opportunities that they need to make things work. And if we as a combined Democrats and Republicans together can address the fact that people with $20 million, $50 million, $1 billion, they don't live a better life incrementally than that someone has 21 million versus $20 million. This whole notion that it's all about money rather than about family and community and making America strong again. And we screwed up our tax policy so bad because those taxes not to be used for transfer payments, but for making our economy stronger and our companies stronger. Let me get to a simple question. Brendan, one of the things that my Republican friends are talking about is getting rid of the EV tax credits that came in the Inflation Reduction Act. That suggests it'll put 133,000 high-quality manufacturing jobs at risk. It'll hand this critical future industry domination over to China. What will Ford and GM and all those international nameplate manufacturers making cars in the United States think about this policy?
Yeah, so EVs are clearly the industry of the future. I mean, you know this better than me as a former car dealer. What we didn't see is we didn't see this taking off when we imposed tariffs under Trump. Just tariffs alone isn't going to do it. You need that investment to couple with it, right? You need to, make that big push in that industry of the future. And again, I'm very worried that this industry of the future is going to be dominated by a geostrategic rival. The way we won World War II was we had all these civilian industries that could be dual purpose for military stuff, right? That's how we won World War II. Letting China build, these industries of the future is not the way we're going to do it. So again, Ford and GM are going to cut back on those investments in the industries of the future that they're going to make if we pull back on these investments.
Thank you very much. I just want to end with the thought, think about this room filled 90% with people filled with economic anxiety about their lives, and the other 10% with more money than they know what to do with. And think there's something fundamentally wrong with the fairness of an economy and a society like this democracy. And we should address it. With that, I yield back.
Thank you, Mr. Kustoff.
Thank you, Mr. Chairman, and thank you to the witnesses for appearing today. Mr. Chairman, when you opened this committee hearing today, you talked about the 2017 Tax Cuts and Jobs Act and its passage and how it was really rocket fuel for our economy that we still benefit today. And I think we all take that to heart. And then something that the witnesses have testified to about is certainty. What we need to do, what Congress needs to do to give individuals and especially small business owners some certainty about the path forward. And so I do think it's instructive from the witnesses' standpoint to talk about the real practical implications of the Tax Cuts and Jobs Act. And if I can, Ms. Couch, with you, in your testimony and in your written testimony, you talked about the importance from your standpoint about your work with small business owners and how important Section 199A has been since 2017 to small business owners. If I can with you, can you talk about, from your standpoint, working with those business owners, what it has meant, not only in terms of being able to maybe hire more employees, but also to provide for their wages and benefits, if you will?
Yes, thank you for your question. So 199A has provided tax relief to free up cash flow that's been reinvested in small business by the owners. And as I mentioned in my testimony, that small business owner income is different from business income. The owners take profits and invest them back into their businesses. And that's done by way of raises and hiring additional employees. They also use that money to invest in software purchases and things of that nature, but they also, they give money to the T-ball teams. They sponsor youth trips. They really invest it back into their communities as well, and that's something that we can't ignore and that I'm afraid would be some of the first things to be cut if that deduction expired.
You worked with these small businesses before the passage of the Tax Cuts and Jobs Act. You worked with these small businesses prior to the COVID pandemic. Your opinion, if Congress had not enacted the 2017 Tax Cuts and Jobs Act and implemented Section 199A, what would the COVID pandemic have done to your small business owners that you work with?
So I worked very, very closely with my small business owners during COVID. I often tell the story that I would, from sunup to sundown, would be on my porch, and there was no time to even, I'd be out there in my pajamas because there would be no time to even properly get dressed. You were on the phone with folks trying to come up with new revenue streams, trying to calm their fears and anxiety, and there were a lot of tears shed because small business owners truly feel that their small business is like a child to them that they've brought along the way. And COVID was a very scary time for a lot of small business owners. And I am certain that without TCJA, that we would have seen a lot more small businesses close up shop during COVID had that not been in place.
Thank you very much, Ms. Couch. Ms. Gallagher, if I could with you, the doubling of the standard deduction has meant, according to the statistics that we've seen, that nationwide some 88 to 89 to 90% of tax filers take the standard deduction and don't have to itemize. Can you talk about your work with people you help before the Tax Cuts and Jobs Act and after, in terms of the doubling of the standard deduction and the benefit that it gave?
Yes, and thank you for that question. The doubling of the standard deduction has not only provided tax savings to middle-class families, it also has decreased the amount of time and energy and effort that taxpayers, business owners, and working families alike have had to spend navigating complex tax filings. So it has freed up their time considerably. I've even noticed in particular, even my high-income taxpayers have used the standard deduction now for ever since it came into play. And the middle-class families themselves, many of them were under that doubling amount for years. They may not have had a large mortgage, or their income taxes may not have been, they might have been just barely getting over the hump. And so by doubling that, it made a big impact on the middle-class families that I work with.
Thank you, Ms. Gallagher. Now yield back, Mr. Chairman.
Thank you, Mr. Fitzpatrick.
Thank you, Mr. Chairman. Mr. Duke, just very briefly, because I want to get to the child tax credit, but you had answered a question to my colleague, Mr. Boyle, that tax cuts don't pay for themselves, ever? Would you wish to qualify that at all?
The Tax Foundation, which lots of people on your side of the aisle cite, they posted last November, and I'm quoting, tax cuts typically don't pay for themselves.
Typically.
I mean, could we find some edge case here, but not with a $4.6 trillion,
Mr. Duke, are you saying that no tax cuts ever generate any kind of economic development, any kind of revenue generation that pay for themselves?
They can, so for example, with the first Tax Cuts and Jobs Act, CBO and JCT found that they increased the economy, and that cut the cost by about like 20% or so.
You're saying, you gave a blanket statement that tax cuts don't pay for themselves. That seems ridiculously oversimplified.
Well, if you could name a tax cut that you think paid for itself, I mean, that would help me, figure out what that.
Your answer to this question was there are none. They don't exist. Is that your position?
I mean, I can't think of any.
Going to the child tax credit, currently the CTC benefits approximately 40 million families each year. Obviously, the Tax Cuts and Jobs Act doubled it from $1,000 to $2,000. Attached a Social Security number requirement for the first time, very important. And to reiterate, under current law, the CTC is $2K per child, and if it were to expire, it would drop back to $1,000. Moreover, the refundability was a key element. The refundability was increased from $1,000 to $1,400. Moreover, it was indexed to keep track with inflation. If we do not extend the child tax credit, all Americans will see their tax refund go down, and specifically for our district in Pennsylvania, families would see their household income, household child tax credit, I should say, cut in half. Ms. Marple, as a stay-at-home mom with 3 children, can you speak to the benefits of the child tax credit for you and your family and the importance of keeping that protected?
Yes. Thank you for your question. I think that as a stay-at-home mom and raising kids at home, there's a lot of pressure at every angle, and a big one is financial. It influences your marriage, it influences all your decisions, especially grocery shopping and trying to meet needs for your growing family. And the child tax credit is a powerful form of communication, and where the government communicates to people like me working behind the scenes that my job raising kids is important to the stability and the prosperity of our country.
Ms. Gallagher, in your experience working with thousands of multi-generational businesses, what have you seen as the major pieces of the Tax Cuts and Jobs Act that have benefited your clients, and if they were to expire, how would they harm these very people?
Thank you for that question. The multi-generational families have benefited across the board on any of the 199A, full bonus depreciation, lower income tax, lower marginal rate brackets. But I would say most importantly, when you bring in the multi-generational piece to this, is the estate tax and the increased exemption. I work at length with businesses and farming clients to develop estate plans that work for them and work for their families, and also try to help benefit the most dollars get to their heirs as possible. And so the estate tax has probably been the most impactful for those types of businesses.
Thank you, Ms. Gallagher. I yield back, Mr. Chairman.
Ms. Moore.
Happy New Year, everyone. I'm so glad to be back with my Ways and Means family. I want to join the chairman and the ranking member in welcoming all of our new members and welcoming our returning members. So grateful. to have this extremely great panel. I hope you had a break so that you could sort of move around a little bit. And excuse my departure with conflicting obligations. You know, this hearing, I walked back in and I felt like I had never left. People making the same comments that taxes are going to go up for every single American unless we extend these tax cuts. I didn't miss a beat. And I guess I was thinking the other day, would have been my dad's 119th birthday. The first time I heard this, I heard it from him. Is the squeeze worth the juice? And I wondered that, particularly when I was listening to your testimony, Ms. Gallagher, when you were saying that, that the 199As were just a great thing, and it's harder for the wealthy to qualify. And I guess that's my biggest issue with the 199A, because all of us want to help small businesses. There's not a single person who's been elected to anything, dog catcher, school board, nothing else, that won't tell you that they don't want to help small businesses. But what is a small business? I mean, is a small business, and I guess I'm gonna go to the gentleman on the end for some answers to some of these questions. Is a small business, some of the ones that we have seen that have received the 1099, the 199A, where they're $100 million businesses, not so small, businesses that are sole proprietorships, have only one employee. We've talked about small businesses as being these entities that have less than 25 employees. But if they make $100 million, where's the break-even point? So I have in my hand, and I'm going to ask the chairman, please, to let me put this in the record. It's a memorandum from Thomas A. Bartold, our chief economist here, data on Section 199A deductions. And he says that those taxpayers with adjusted gross incomes of less than $174,000 account for approximately 23% of all this money that we spend on it. Whereas people with gross incomes, adjusted gross incomes above $644,000, placing them in the top percentile, account for over 50% of all of the Section 199A deductions. So I guess I'm going to ask you, sir, how does the distribution of the 199A comport with the notion of tax equity and tax fairness?
Yeah, absolutely. So the data you were citing was on, who gets the deductions. And actually, in some ways, that understates the regressivity because, a $1,000 deduction for somebody in the 0% tax bracket does nothing for them. A $1,000 deduction for somebody in the 40% tax bracket gets them a lot more, right? And so what we know is that taxpayers making over $1 million got half of the benefits from 199 Cap A. And so that's the distribution of it, and hopefully it trickles down, but we have a study from a Carnegie Mellon economist that shows that cutting the top rate on pass-throughs only help the business owner and their highest paid employees.
Exactly. I sure don't have enough time. I want to thank all the women who really testified. Also, Ms. Silver, you talked a lot about being able to buy new equipment, but that wasn't the 199A. That was like the bonus depreciation and stuff that helped you with that. Am I correct?
Well,
those other just yes or no. It wasn't the 199A that helped you get equipment.
yes.
Okay,
199.
good.
I have 1,000 examples I could tell you of what.
Okay, I got 30 seconds. So I just want to talk to these, especially the moms with the child tax credit. I mean, this is my passion. I have 3 daughters, 3 granddaughters, 3 great-granddaughters, ages 6 to 1 years old. This is so important. And sometimes your happily ever after isn't, and I'm so glad you found love again and you found a good husband. But what I am saying to you is that there are 19 million children whose parents can't get any or very little of this deduction, the poorest, most vulnerable kids that need to eat and they need to be well off. only because their parents don't earn enough money. And I think when you start talking about work conditions, I mean, this is not Charles Dickens, people. We're not asking kids to go to work. There should be, why do we have a work requirement in order to make the child tax credit totally refundable? I think that families like yours are great, but I think poor families and poor children deserve this benefit as well. Mr. Chairman, thank you for your indulgence. Thank you, witnesses. I wish I had more time. I got so many questions. I'll come and mess with you guys afterwards if you're still there.
Thank you, Mr.
I yield back.
Mr. Stubbe.
Thank you, Mr. Chairman. President Trump's tax cuts undeniably sparked significant economic growth. The TCJA dramatically increased the net worth of Americans, especially low-income and middle-income families. In 2018 and 2019, low-income families increased their net worth by 37%, and the net worth of middle-income families skyrocketed by 40%. With many of the TCJA provisions expiring after this year, it's imperative that Congress act this year to ensure that we continue pro-growth policies that help American families. In my district, the consequences of inaction would be devastating. My constituents, on average, would experience a 24% tax increase if the TCJA is allowed to expire. Meanwhile, over 55,000 small businesses in my district alone would be hit with a 43.4% tax rate. The expiration of TCJA would result in small businesses closing, jobs lost, and American families suffering just so the government can take more of their hard-earned money. The good news is that Congress can avoid such economic catastrophes by extending and making permanent TCJA provisions like the individual rate cuts and the 199A qualified business income deduction, which helps small businesses compete and provide jobs for millions of Americans. Moreover, Congress must end the immoral death tax once and for all. It is fundamentally unjust that the federal government claims a right to the property of taxpayers just because they die. This immoral provision of our tax code has hurt family farmers for far too long. Unless we act, millions of family-owned farms will be subject to even more taxes. This time, Congress needs to finish the job and deliver a final death blow to the death tax. Ms. Couch, I'd like to ask you to start with you. As an owner of a small business that also services hundreds of other small businesses, can you please tell us how 199A has a real-world impact for your employees and customers?
Yes, thank you for your question. So 199A has really been wonderful tax relief for true small business owners. My typical client earns gross revenue under $3 million a year, employs 10 or less employees. So we're talking about coffee shops, we're talking about ice cream shops, restaurants, professional service business owners, the real heartbeat of the American economy. And I have seen 199A have the greatest impact on that segment of business owners, more so than any other form of tax relief in my 21 years in practice. So it provides it frees up cash flow to reinvest in employees, to reinvest in equipment and software. And as mentioned earlier, I think that it really provides a little bit of cash flow to give back to the community, to sponsor T-ball teams, to be there for PTOs and things like that, which really is very impactful when you're such a strong advocate for your community as a small business owner.
And if 199A were allowed to expire, how would your businesses and clients be forced to respond?
If 199A expires, it will feel like a tax increase on small business owners instead of a sunset of a tax deduction. And so what you will see as a result of that is the inability to provide raises, the inability to invest in new equipment, the inability to really R&D and different things of that nature that is so crucial when you own a small business. And quite frankly, I think that it will cost some small business owners their businesses. I think it is that impactful.
And Ms. Gallagher, in your testimony, you note that IRS statistics do not reflect the difficulties faced by family businesses being forced into fire sale situations by the death tax. You mentioned that this often results in family-run businesses being acquired by larger corporations. How does this affect local communities, and are employees of these family businesses impacted?
Yes, they're definitely impacted, and I have seen firsthand businesses having to succumb to multinational corporations or private equity because they simply cannot afford to pay the death tax. It has impacted the communities that I've seen by the lowering of jobs and just general economic growth within the community. Some of those companies have purchased our businesses and taken the work elsewhere, out of the community altogether. I too have seen an impact on the community, on numbers, dollars being contributed back to the community in terms of high school football sponsorships, and any type of community event you can think of has decreased considerably. If I could just add one quick thing on the 199A to your testimony, I think it's important to note that 199A has impacted the small businesses and middle class more than any of the businesses in this country. We talk about the large businesses or the wealthy or the high income, and I can firsthand tell you it does not impact them as greatly because, frankly, many of them don't even qualify for it. If you think about it, some of the highest income businesses, doctors, lawyers, CPAs, engineers, service businesses, don't even qualify for this. And there are significant guardrails and limitations in place to make sure that if a high-income individual is going to qualify, they are absolutely required to invest in their employees and infrastructure and equipment to even qualify. So I would just like to make sure it's on the record that 199A is the most impactful for the small businesses and the working families who run them.
Thank you all for being here today. My time's expired.
Thank you, Ms. Tinney.
Thank you so much, Mr. Chairman, and thank you for holding this meeting. And congratulations and welcome to all our new members on both sides of the aisle. And this has been, incredibly helpful to me to listen to today. I am one of those small business owners that knows what it's like to struggle to make payroll. There are times when we couldn't make payroll, and I went out and got a 30% loan on a credit card, several of them, thinking someday we're going to go under. Thankfully, that didn't happen, and I just know that kind of stress. I sat there and combed through my accounts receivable list and said, geez, hey, you owe $10,000. Can you give $5? How about $3? How about $500? Just to make payroll. And every single person that works in our family business, which we still have, is an important part of our entire family. And every one of them has a family, and we provide health care and a 401k, and we provide them with a livelihood and a challenging, good job, as many as we can. And it's very important to us, and that's why the Tax Cuts and Jobs Act was so important to my business. Small family-owned business started in the 1940s by my grandmother, handed down through generations to us, and listening to you all today has been amazing. And so when I hear that this is about the wealthy, I come from New York. We are currently the highest tax state in the entire United States, with the highest burden of compliance and requirements for running a business. It's a hard place to be, and I ran a newspaper in a dying economy, in a dying industry, and we sold it, thankfully, in 2004. But what I really want to talk about, and I don't know even where to start. You're all so good, and you've all given great testimony. I wanted to just say something quickly to Alison from NFIB. I just want to thank you, because NFIB has been an invaluable resource for our business. We joined in the 80s, and you've always been so helpful in understanding and articulating what we've been through as businesses. And I just so appreciate what you've talked about. And when you talked about 199A, I'm looking at your testimony, and this really stuck out for me. You talked about the macroeconomic impact of 25.9 million small businesses use the 199A deduction. That is critically important in upstate New York. And everyone thinks of New York as New York City. Upstate New York, 95% of the people where I live go to work in a small business that's dependent on 199A, and we need that to continue. That's so critically important. And you indicated that these pass-through entities, 33 million are pass-through entities throughout this country. This is such important information coming from you, so that I hope that my colleagues on the other side of the aisle realize how critical this is. And you're all talking about wonderful things. One of the great things, Michelle Gallagher, wonderful. One of the most important things you said in this committee meeting, as a small business owner, that we nearly got all of the cash taken, the little bit that we had, because of the death tax taken out of our business. Very small business, a lot of former farmers work for us. But you said the IRS spends more money on compliance with the death tax than it actually brings in. How important is that? The IRS, with compliance, enforcement, litigation, spends more money going after small businesses, family farms that have invested in expensive equipment and all this than it actually collects. That is the best case for getting rid of it, especially because we have one in New York State as well. It's not just federal. We have all these things on the state level. So thank you for doing that. I really, it's just important. And one of the things I just wanted to get back at and also ask a couple of questions of you is, as we go through this process of trying to figure out a way to protect our family businesses and the jobs, what would you provide today? And I guess I'm going to go to Courtney. I've mentioned all of you, so Courtney Silver. What would you talked a little bit about, making things predictable in the business, and that's what every business owner is looking for: predictability, transparency, neutrality, simplicity in the tax. Knowing what you're going to expect so you can budget for it. What would you highlight in dealing with this estate tax? What would you say that would happen if your death tax? I know you talked about this earlier, but I want to hear it from you again. What would happen if the death tax expired in your business, and what would be the consequences of that?
Sure. Well, we may not continue in business. And it would obviously depend upon the year, what was going on, what was, that the financial statements, the financial condition of the company looking forward. But thinking about having this huge tax bill in a situation where a company's passing to another owner, we're capital intensive. We aren't sitting on piles of cash. We use our cash flow to reinvest.
Exactly. That is so important because so many I represent the largest agricultural district in the entire Northeast. We have farmers who have spent millions of dollars on equipment, on labor, all these things. If we were to implement another death tax, that would end basically nutrition in upstate New York that supplies not only for our region, our state. We ship some of this stuff overseas, our food, nutrition. This is so important. I know I'm out of time, but I just want to say again, thank you so much to all of you for what you do and for supporting our small business community. There is nothing more important than making sure that we extend these tax cuts to help the middle class. And it was the best thing that's happened to upstate New York in 30 years, and we're so grateful and hope that you'll continue to advocate. Thanks so much. I yield back.
Thank you. Mr. Evans, you are now recognized.
Thank you.
Would you yield?
Yes. Thank you so much, Mr. Evans, and I won't take much of your time. I just wanted to, with unanimous consent, to be able to put something in the record. We have had the National Federation of Independent Business witness here, but the small business majority sort of agrees with the notion of, in line with what the Joint Committee on Taxation has said, that this 199A provision goes largely to higher earning individuals. And so while it might be one of the most important provisions for the reauthorization, it's actually one of the most expensive and really accounts for individual taxes increasing. I just want to point one thing out too. I was around in politics in 1986, the tax reform at that time, and that is when a lot of businesses organized themselves as pass-throughs because they received a benefit even as far back as then. There's no equity issue involved with this overblown 199A benefit. Thank you, and I will yield back to Mr. Evans.
Mr. Duke, I'd like to talk a little bit about the Earned Income Tax Credit. I believe that the Earned Income Tax Credit is the most important tool we have in tax space to reduce poverty. It has been active in introducing legislation to expand and to improve. Although this credit normally is of bipartisan support, Republicans did not use the opportunity in the last 2017. Meanwhile, Democrats have passed legislation in 2020 to expand the last credit to more individuals and help lift more people out of poverty. So could you speak to that issue, please?
Yeah, so, as you know, the Earned Income Tax Credit is just hugely important for American families. It's our second largest anti-poverty program after Social Security. And, Paul Ryan was actually a huge supporter of expanding it for childless workers. But they failed to do that in 2017. And again, that is the group that the tax code taxes into poverty or deeper into poverty. At the same time, one of the pay-fors for the tax legislation was changing the inflation index, which sounds very nerdy, but gets important, for how we calculate the Earned Income Tax Credit.
Mr. Duke, the Joint Committee on Taxation says that under the last Republican tax bill of $6 billion, less on improved income tax credit was paid out prior to the bill. Can you please describe why?
Yeah, so they use the budget reconciliation process, which means that you can't increase deficits outside of 10 years, because when you do a party line vote, you have to use reconciliation, right? And what that means is they needed a pay-for their permanent corporate tax cut. There were two pay-fors. There was cutting healthcare by eliminating the individual mandate in the Affordable Care Act, and then there was changing the inflation index by which we adjust all of our tax parameters in the tax code for inflation, including the Earned Income Tax Credit. Now, for some provisions, maybe that's fine because, the individual tax, rates, gives them still a tax cut. But for really low-wage workers who don't pay, normal income taxes, they didn't get that benefit, but they see a slower growth and, frankly, a real cut in their Earned Income Tax Credit. So in that sense, the reduction in the Earned Income Tax Credit helped pay for the permanent corporate tax cut.
One last real quick, piggyback a little bit. Under the Republicans' current plan for their tax bill extensions, would this problem get worse?
I haven't heard, what the plan is to do on, the Earned Income Tax Credit. Again, I think they're kind of leaving it behind. But again, I haven't heard any, any tax cuts for, those super low-wage workers who are making $14,000, $15,000 who aren't paying federal income taxes. Again, that's why the American Rescue Plan expansion was so important. It tripled the size of the Earned Income Tax Credit for those folks so that we stop taxing low-wage workers without kids into poverty or deeper into poverty.
Thank you, Mr. Duke. Thank you, Mr. Chairman.
Thank you. Ms. Van Dyne, you are now recognized.
Mr. Duke, I'm perplexed by a lot of your testimony today. You've had a lot of criticism over the small business deduction, so I'm just curious, what do you consider a small business?
I don't have a particular definition of it.
You don't have a definition?
I don't think I've said the word small business deduction, so.
So the 199A?
Sure, but that's pass-throughs. They can be really big. There's no,
So
cap on their size.
do you think the way that it's being held right now helps small businesses? The 33 million small businesses that we have, the 99.9% of all businesses in the U.S.
Sure.
that are small businesses that are able to take advantage of this, do you think that the 199A actually helps them?
Sure, it gives them a tax cut, increases deficits, increases interest rates, though.
So
There's
you're
trade-offs.
concerned about the deficit. You're concerned about the debt.
For sure.
And as a Democrat, I was really surprised as a Democrat witness that some of the ideas that you held, like we should be concerned about the debt. And we should be concerned about how much of that's owned by China. I'm curious, as a volunteer on the Biden-Harris transition team, and as the person who was part of the Biden administration's Build Back Better and American Rescue Plan, as the White House National Economic Council, right? You were the senior policy advisor to the White House on those two bills. Were you concerned at all about the trillions of dollars of debt that they added, the trillions of dollars of debt that China may potentially own, and the benefit that China directly got as a result of those bills? I'm assuming you were advocating against that, because if you don't want additional debt, God forbid, we have trillions of dollars that are going out the door for Green New Deal programs that are benefiting China. Am I correct?
The macroeconomic context matters a lot. Inflation is high.
Oh, wait.
Unemployment.
So the inflation that by adding to the debt, the 20% inflation that we got over the last 4 years, I'm assuming that you are advocating against all of those tax increases.
Every country in the world experienced those
The
same price
20%
increases.
that we got in inflation.
Not as a result of
I'm
it.
assuming you were against those.
Justin Trudeau is facing that problem.
I do
In
not
Germany,
want to
they're facing
compare
that
the
problem.
U.S. to Justin Trudeau. There's a reason why that man has quit his job.
Okay, but inflation was a global supply chain phenomenon that affected every
So
country.
supply chain, you were also, if I am correct, you were the point person on the supply chain data during the infant formula crisis of 2022?
Yes.
Okay, so we all saw how that went. I want to make sure that that we are appreciating the opportunity right now to be able to kind of correct some of the views that we're seeing, the misinformed views of the Tax Cuts and Jobs Act. You were saying that the rich experience getting richer, the poor experience getting poorer. However, in 2024, about 1 out of 180 American taxpayers will make $1 million or more. It's about 5%. So based on the government's forecast, the government's own forecast on this, those earning $1 million or more in 2024 will pay an average of about $776,800 in federal income taxes, which is 475 times as much as the average American taxpayer who's making between $50,000 and $100,000. The top 1% will pay an average of 31.5% this year, compared with 10 to 12% of the middle class and about 0% at the bottom. And the rates near the bottom can be negative because of the refundable tax credits. So according to the Federal Reserve, low and middle income Americans received the largest increase in wealth during 2018 and 2019. Low-income families saw their net worth increase by 37%, while middle-income families' net worth increased by 40%. In the 2 years after TCJA, more than 6.6 million people were lifted out of poverty, dropping the poverty rate to 10.5%, the lowest level in U.S. history. And yet we're somehow arguing that that's the TCJA did nothing for the lower class. It blows my mind that we can even say that. Ms. Silver, I want to thank you very much for your testimony. You talked about how much you were able to reinvest in your businesses after TCJA was implemented, and that is great to hear. Can you talk a little bit about what the cost would be if your business, if Congress did not renew the President Trump's tax cuts?
It's going to result in less investment in our equipment, less investment in our people, less investment overall. It would be very difficult to stay competitive,
Okay.
to grow, to stay
So
in
all of the
business.
people that you pay would possibly lose their jobs or get paid less?
Potentially, yeah.
Or would actually your job and your investments would shrink?
Absolutely.
It's a real-life example right there. Mr. Chairman, I asked to submit a letter from the Wine and Spirit Wholesalers of America expressing support for the extension of the small business credit into record.
Without objection.
We hear the partisan pundits claim that the tax cuts were just too big for corporations. But this is just not true. As part of my work on the Main Street tax team, we were able to get out of D.C. and we talked to real business owners. We heard about the successes from policies such as the small business deduction in Section 199A, which created over $66 billion in tax savings for Main Street businesses. One of the businesses that I met with in North Texas was Republican National and Distributing Company, where I held a roundtable with over 25 small businesses, including roofing companies, community banks, local banks, and realtors. These are the businesses across the U.S. who are benefiting from this, and this is why Congress must act. Thank you very much, and I yield.
Thank you. And then the birthday boy of the committee, Mr. Feenstra.
Thank you, Mr. Chairman. And I want to thank each one of our witnesses. You all have great testimonies. I'm very impressed. And I think we all understand how important the Tax Cuts and Jobs Act of 2017 was to our families, to our businesses, to each of us. I think about my district. I live in a very rural part of northwest Iowa. And every day we're fighting to survive that main street. That main street made up of all these small little bakery, hardware store, drugstore, you name it. And this 199A is so critical for their existence. If we did not have 199A, if it sunsets, obviously they'd have a 43% tax increase. What would that do to rural America? It'd be devastating. And to our families, you know, it's been noted many times here that it'd be a 26% increase to each one of our families. Where do we get those dollars? Where do we get those extra tax dollars? And I look back, so what did it do from 2017 till now? I mean, we went through COVID. This all made a difference. I mean, if we didn't have these Tax Cuts and Jobs Act, how catastrophic would it have been to our economy? I mean, we would have probably been in a deep recession, even depression. Well, we don't ever know. But we do know this, is that we survived. And that's what we have to look at. There's one thing that really bothers me yet, and that is a double tax. I want to talk about the death tax. I introduced the Death Tax Repeal Act, and we'll reintroduce it in next Congress. I had over 170 members sponsor this because everyone thought it was so important. But think about this. The government, when somebody dies, the government puts their arm in the grave, the IRS puts their arm in the grave, pulls the person back out and says, you owe 41% tax on everything that you accumulated in your life. Think about that. 41%. Pulling them out of the ground and say, you owe 41%. That person has already paid tax on most of that already. And yet, to pass it on, we got to pay 41% tax. That's why I am so passionate about getting rid of the death tax, and I hope we can do it this coming year, especially in reconciliation. On the other side of the death tax, since we have currently, we do have the death tax, we have estate tax. It costs approximately $18 billion for small businesses to comply, to try to figure out insurance, to try to figure out trust, to figure out how to manage not to pay that 41%. 18 billion, you know, we could save a lot of money by just getting rid of it. So Mr. Gallagher, I want to talk to you about this. Obviously, your family has to have jumped through a lot of hoops to try to salvage your business to the next generation. Can you talk about that, how it affects you and what compliance looks like?
Yes, and thank you for that question. I'm very passionate about it as well, primarily because I've seen the impacts of what happens when either people have not planned for it or just simply don't have the money to pay the tax. So the hoops are real. The hoops that these businesses and farmers jump through is starting out with identifying their personal goals for their family, first of all. So every single one has a different story and a different need and a different goal. So this is not a cookie cutter plan that everybody can just put into place. It takes a lot of customization and a lot of planning, and a lot of planning early.
Yes.
The hoops include setting up multiple entities, like a number of different trust vehicles can be used, limited partnerships, LLCs. They're setting up entities to help create the best benefit so the heirs can get the most amount of money when death does occur. You have to have many appraisals done. Your business has to be appraised, your real estate has to be appraised, your farm has to be appraised. The costs are astronomical for what they have to go through.
All the stuff you have to go through just to comply with the death tax, just to try to figure it out. And we can get rid of it and we don't have all the problems. I want to talk about one more thing, paid family medical leave tax credit. To me, this is so important. Ms. Couch, you talked about this in Atlanta. Can you briefly talk about how important this is to small businesses as an incentive and not a mandate?
Yes, thank you for your question. So the Paid Medical Leave Act is very important to be able to retain, you want to retain quality employees. And right now it's very difficult, especially in my industry as an accountant, to find and retain quality employees. However, it's so important for small business owners to not be mandated to pay various things like paid Family Medical Leave Act, and it's much more beneficial if it comes in the form of a credit.
Absolutely. I want to thank you for that. Incentivize makes all the difference in the world, and we can do family medical leave, and I'm, again, passionate about that also. Thank you very much. I yield back.
Thank you, Mr. Schneider.
Thank you, Mr. Chairman, and I want to thank you for having this hearing, and I thank all of our witnesses for sharing your perspectives today. Ms. Silver, I just want to commend you. I actually went and looked at your website and saw what you do as a company, and your investment in people, especially young people, and bringing people into manufacturing is so important. Also impressed, third-generation family business. Before I came to Congress, I was a consultant. I worked with family businesses principally. And getting from the first generation to the second generation is hard. Less than a quarter of all businesses make it to that point, but less than 10% make it to the third generation and 1% to the fourth generation. So it is really difficult. And there's a lot of reasons for that, obviously. Ms. Gallagher, I might turn to you because you advise a lot of these businesses. I'm guessing a lot of them are family businesses. The firm I work for as a consultant is now part of Plant Moran, where I know you started your career. What What do you tell your clients as they approach a point where they're starting to take on too much debt? What is the cost to a family business of having too much of a debt burden?
There are a lot of different aspects of a family's finances. So debt in a silo cannot be addressed.
Well, I disagree, because when you have too much debt, as you start accumulating debt, you have to service that debt. And you have to start paying the interest on the debt and start paying the principal on the debt. And as a business, as you're trying to grow, if you take on debt to maybe acquire some equipment or go and branch off into a new business line, that's going to pay itself back. But if you're taking on debt to basically expend extravagantly, that debt service is going to become a huge burden. Ms. Gallagher, are you aware of what the debt service of the United States, what the burden is at this point?
No, I am.
Okay.
I'm not.
It's larger than our defense budget. We're paying more in interest and service of our debt than any other line in our discretionary budget. And so as we stand here and we find ourselves again in this conversation about giving large cuts in taxes to people who are doing really, really well. And I'm not talking about small businesses. I'm not talking about folks who are struggling to make ends meet. But to take away from programs like Medicaid and investments in education, to give a tax cut to people who don't really need it, and add to the debt of the country, so we're losing. Ms. Silver, you know from your experiences, you're looking at making ends meet. The money that came in, we talked about it earlier, the money that came in during the crisis, the pandemic, allowing companies to invest. I think you said you invested in HVAC, which gave better air quality probably to your employees. You invested probably in training as you brought in new equipment. All of those things are investments that if you're spending all your money servicing the debt, you can't do. So as we look at this, just simply extending the tax cuts across the board, Mr. Duke, you talked about it, the top 2% of income earners, folks who are making a whole lot of money, and God bless them, their success helps grow our American economy. But giving them another tax cut will cost us another $2.5 trillion in debt in the first decade. And that's money that we have to pay back, that we have to service, that makes it virtually impossible to invest in our communities, invest in building resilience so we don't see crises like we just saw in California or earlier, late last year, a month ago in North Carolina. Debt has a cost, and it doesn't need to be siloed. It needs to be discussed and assessed, and we need to have the open conversation. My colleagues on this side, we have a lot of agreement. I know I'm running out of time, and I did have questions, but I got carried away. But there are things that we agree on. I think we all agree on both sides of this aisle that we want to help small businesses succeed. Ms. Silver, I want your business to pass to the fourth generation. Do you have a fourth generation coming in the business? Okay, I want the business to pass to a fourth generation. Less than 1% make it that far. It's really hard. And I want to help working families make ends meet, and not just make ends meet, I want to help working families get ahead, and I think everyone on this committee, on both sides of the aisle, agree on that. I think we agree that we want to make the American dream more real for more Americans. We want every American to have that chance to succeed. So there's a lot of debate and a lot of discussion about how one side is doing this or that, or taking this position and demonizing. Let's get away from that and start talking about how we can put working families, Americans, American economy front and center, and find common ground. And as my friend Randy Feenstra was talking about, let's find ways that companies can pass and farms can pass generation to generation, and we can build on the American dream for every American. And I went too long without asking a question. I'll yield back.
Ms. Malliotakis.
Well, thank you, Mr. Chairman, and thank you all for being here today. I think we're, as members, are very excited about this opportunity to build on the success of Tax Cut and Jobs Act. The TCJA, it created millions of jobs, it lifted middle-class wages, it brought unemployment down to record lows for African Americans, for Hispanics, did great things for women entrepreneurs, and we're really looking forward to seeing not only extended and made permanent, but also adding some additional provisions to make it stronger. One of the things that we saw for those that I represent that was beneficial was the doubling of the standard tax credit, the doubling of the child tax credit, the lowering of the personal income tax, and the elimination of the alternative minimum tax. And so I wanted to talk to Ms. Gallagher because you and I agree that the alternative minimum tax cannot come back. And the issue for my constituents, middle-class families in Staten Island, Southern Brooklyn, a lot of them didn't benefit from the SALT deduction because of the alternative minimum tax. And so we have to make sure that that does not come back. But we are, as SALT state members, looking to try to provide an increase to that SALT deduction. And we recognize that the reason why we need SALT relief is because our mayors and our governors treat taxpayers like ATM machines. They continue to hammer them over the head year after year. Property tax levy goes up. They don't want to cut the personal income tax rates at the local and state level, like we saw President Trump do at the federal level. So we recognize that it really is a problem created by our local and state governments, but nonetheless, we met with President Trump. We had a successful meeting. He does want to help, as does the chairman, has been willing to help provide relief from the federal level to help those middle-class families. So I guess my question for you, first and foremost, is the alternative minimum tax should not come back, right? And if so, what kind of impact would that be on middle-class families?
Thank you for that very good question. And usually when we start talking about the alternative minimum tax, or AMT as I'll refer to it, people just run out of the room, frankly. It is one of the most complex and complicated tax computations in the Internal Revenue Code. I mean, I remember trying to learn it as a young tax professional and threw my hands up many, many times. So I was thrilled to see the AMT exemptions increase considerably so that so many of my clients were no longer subject to it.
And it targeted the middle class, really. That's who got hammered by it, right?
It definitely targeted and hammered middle class, no doubt about it.
And you said that in your testimony that if it does return, it would affect 7.2 million taxpayers starting in 2026, and that would be predominantly the middle class.
Yes.
And the SALT deduction, can you explain how constituents may have not benefited from SALT because of the AMT?
Yes, so the SALT deduction is, because of its limitation, the SALT deduction is actually part of the computation of the AMT. It's an add back. So when you're calculating your alternative minimum taxable income, you have to add back all of your SALT taxes. And so my warning in my written testimony was that if there's an argument to have SALT, then we have to keep AMT out as well.
I agree
because
with you.
everybody who may not be limited in SALT will now be paying AMT, and they're no further ahead than they were.
Okay, I agree with you 100%. Now, with the SALT, if we're able to increase that deduction, do you have any estimates of what could cover a majority of middle-class families, let's say people with incomes $400,000 or $500,000 or less?
I have not done that math.
Okay, no problem.
Sorry.
Just curious. I know it was around $23,000 was the average deduction for middle-class families with an income level of $200,000 and $500,000. That was in 2016, so today it would probably be more like $30,000 if you want to hit that income level or below. Should we index it like the standard deduction so it goes up year after year to keep pace somewhat with inflation?
Well, I think indexing is always fair. I mean, inflation in dollars go up tremendously, so
Do you think we should cap income eligibility so it is targeted to the middle class and not completely lift the cap? I think there's some concern from members across both sides of the aisle about giving relief for ultra-wealthy. Do you think this should be targeted, the SALT deduction, increase it and then cap it so only certain incomes could qualify?
Well, certainly I'd want to look at the pros and cons of all of those things, but certainly there is a middle ground to get the middle class the relief that they need.
Great. If we wanted to also limit it for properties, would it make sense to limit the real estate portion or the property tax portion to just your primary residence? Would that be something that could be a possible solution to kind of limit it?
It certainly could. Not, I mean, a lot of folks don't have more than one property, not just the middle class. So
Thank you. All this salt got me thirsty, Mr. Chairman, and I've run out of time, so thank you very much, and I yield back.
All right. Votes have been called. We're going to try to run up as close as we can to the time that we can make it to the floor to vote, and then we'll return back promptly whenever we do have to recess for the 3 votes that's been called. But Mr. Carey is next.
Thank you, Mr. Chairman. It's an honor to serve on this committee again this session, and I also want to welcome our new members to the committee, on both sides of the aisle, so welcome. This body delivered landmark legislation in 2017 that provided, as we've heard from all of you witnesses, most of you witnesses, provided significant tax relief for Americans by putting money back into their pockets and for working families and boosting our economy. And we must make these effective tax cuts permanent. I think we've heard that from many of you today, and build upon the success of the Tax Cuts and Jobs Act to benefit working families and our businesses. This would ensure that Americans don't see an increase in their taxes, and on average, save Ohioans about 23%, a 23% tax hike. You know, last Congress, this committee and the House overwhelmingly passed the Tax Relief for American Families and Workers Act, which included many of the policies to help working families. We need to continue to support these policies and help our working families grow. As a member of the Working Families Tax Team, I have heard firsthand from members of my community over the last 8 months about how TCJA policies have helped them and the importance of extending these tax cuts. Credit for Caring. This is a piece of legislation that I am proud to lead with my fellow Ways and Means member, Representative Linda Sanchez, and it's called the Credit for Caring Act, which will provide eligible working caregivers a tax credit to help offset the costs of care that they offer. It would allow them to continue to work while caring for a loved one through illness, disability, and aging in place. I'm looking forward to continuing that work on tax policies that will help these working families succeed. Mrs. Marple, I want to thank you so much for taking the time to come out here. And I was touched by your story, number one. It sounds like you have a lot of things going on. There's no doubt about that. But I just, you were once a single mother, and now you're remarried, and you have two children, and very similar to my mother. And so I appreciate what you're doing. In my home state of Ohio, a family making a medium income in my district is about $75,000. And they would see a tax increase of about $1,540 if these taxes are set when they are set to expire. And 89,350 families in my district would see their child tax credit benefit cut in half. Let me just say that number again. 89,350 would see that child tax credit benefit cut in half. So let me ask you, Mrs. Marple, can you give me any idea how a tax increase like that would impact your family?
Yes, thank you for your question, Congressman, and thank you for the opportunity to talk about families today. I think that, as I talked about in my testimony, that we are raising kids in a culture of giving up. And as we do our taxes and we find out that the powerful communicator of the government, that we're doing a good job as parents, when we find out that that has been cut in half, that would be, for me, it would mean that I would have received either back less money or I would have owed money for my taxes, which would have added to the financial burden. But it also would kind of take the wind out of our sails in doing the work that we're doing to build the country and to fight against this culture of giving up. The tax credit remaining permanent and expanding would just encourage families like mine to not give up.
I want to thank you for that testimony. I was going to have some other questions, but I'm running short on time. But I just want to say I represent the largest city in the state of Ohio, which is Columbus. A recent study by the National Association of Manufacturers found that Ohio could lose upwards of 208,000 jobs and $18.9 billion in wages and over $37 billion in gross GDP if we don't extend TCJA. So I just want to point those numbers out again. 208,000 jobs, $18.9 billion in wages, and $37 billion in GDP. And with that, Mr. Chairman, I yield back.
Thank you, Mr. Panetta.
Thank you, Mr. Chairman. Thank you, ladies and gentlemen, for not just being here, but for your businesses, for your families, for your communities, all of the work that you do. We appreciate that. And let me also just start off by saying, as someone whose district has experienced many natural disasters, I echo the sentiments of my colleagues that making disaster relief contingent on anything is pretty despicable and actually politically stupid as well. I understand the rhetoric, but doing that to vulnerable and defenseless Americans is absolutely un-American. Now, I appreciate your American stories, especially the fact that government has actually helped you. I think you've all provided some pretty nice stories, and we appreciate that. And I want you to know that we here, even though we're on this side of the aisle, we are rooting for you. We support you, and we want you to continue to succeed. But in order to continue to help you, to help our nation, we got to talk about how we pay for things. And if we don't, we just can't do a simple extension of the Tax Cuts and Jobs Act, their expiring provisions. Because if we don't, it's going to be hugely expensive. According to the CBO, as we've heard today, it could reach a $4.6 trillion price tag. And with the national debt already at $36 trillion, a deficit at $2 trillion for fiscal year 24, it is incumbent upon us to not only do something about our debt, we must do something to pay for any type of extension when it comes to the TCJA expiring provisions. I believe the American people don't want to have an unpaid tax bill, and a bill that will further disintegrate our country's finances and destroy our nation's credibility. A partisan deficit inflating tax bill is not the solution, and I hope that we instead focus on advancing bipartisan legislation that addresses the real challenges that Americans face by figuring out how we pay for those solutions. Now, when it comes to paying for itself, there have been plenty of estimates that have found that the TCJA has failed to do that. And the reason being is that while certain cuts can spur some growth, they don't spur growth at a rate high enough to offset the cost in revenue. Now, Mr. Duke, as you shake your head, how much would the economy have to grow to fully offset an extension of the TCJA?
Talking about, so we have like a average tax rate of 20% or so, so you need 5 times the amount of growth coming from that in order to just make it all back. So we're talking 7-8% or something.
Is that realistic?
Large. Yeah.
Is that realistic, and are the policies of the TCJA likely to bring about that growth?
Yeah, absolutely not. CBO showed that it would shrink the economy in the long run. The Tax Foundation, which is a right-leaning organization, found that economic growth only cuts the cost by 14%. So it's still just there. You still have a big tax cut you need to pay for.
Now, it's also been floated that we can eliminate credits from the IRA as a pay-for, as you've heard, Mr. Duke, correct?
Yes.
What would the elimination of energy tax credits in the IRA do to the ability to expand our economy?
Yeah, so, first, households would face higher costs. They would pay more for electricity. They will pay more for, electric vehicles. It also, again, puts us at, kind of under China's thumb, that these are the industries of the future, and they're trying to build them strategically. They're pouring in trillions of dollars to build these industries, and, we need that foothold in the future if we want to, basically go toe-to-toe with them.
Now, the president-elect has proposed across-the-board tariffs of 10 to 20%, as well as a tariff of 60% applied to imports from China. Some have suggested that these tariffs could be used as a pay-for the extension of the TCJA. Now, Ms. Silver, you operate a machining business that, according to customs reports, imports primarily machinery, gums, resins, and aluminum from the United Kingdom, correct?
No.
You don't import those?
All of those things you said, no, from the United Kingdom?
Where do you import them from?
My raw material? It's mainly U.S.
You don't have any imports to your business?
I'm sure there are. We've had some bearing assemblies where we're sourcing bearings, and they're probably not all made here.
Got it.
But our majority of our raw material is made here.
Got it. But if you did have imports, they'd obviously be subject to these tariffs, which would then lead to price increases for your business, correct?
Correct.
Right. And is that how you would you want to pay for the TCJA with those price increases?
We are, as you're saying, we're a participant in the global supply chain, and I would want Congress to tailor any policies, so that we can continue to participate in that and be competitive.
And that would that include price increases on imports for you in your business? Is that what you want?
Well, no, I don't want any price
Thank you. I
increases
yield
on
back.
anything.
The votes are ticking down. I think we'll call on one more, and then we will recess and then come back directly following votes. But Mr. Moore.
Thank you, Mr. Chairman, for holding this important hearing. To the witnesses, thank you for being here. It's been a slugfest, and there isn't a more important conversation to be having right now. And I appreciate my colleagues on the Democrat side that we need to have a focus on deficit. We need to continue to have that. It's been absent since in my time of Congress enough to be able to see policy driving forward to do that. The truth is we need a strong economy. A strong economy will produce revenues. We've seen a consistent 17 average percent as a portion of GDP pre-tax cut, post-tax cut. That's just data. So we are still seeing strong revenues even with tax cuts that we did in 2017. That's where the focus needs to be. Now, there's a looming deficit that grows continually, and our interest that we're paying on our debt is what is growing the largest budget line item that we've had, and over the last 4 years, that's been increasing about $200 billion a year. That's where the issues come in. That's where the deficit comes in. But our only saving grace, our only fighting chance is to maintain a strong GDP and continue with revenues increasing. Look, it's important to highlight, again, we've touched on it a lot. My district, the average taxpayer would face a 20% tax hike if TCJA expires. A certain part of this bill that's very important to me and my team and my district is for me to be laser focused on building the pro-family and pro-growth reforms from TCJA to help American families, communities, and small businesses thrive. Ms. Marple, I appreciate your testimony. Your story's awesome, very, very important, and I think that a lot of people could relate to about the child tax credit and how these reforms in that 2017 bill provided tax relief to your family. This illustrates the great work that was accomplished in 2017 and how we can build on this this year. It's the reason I wanted to be on this committee is because I knew this was looming and this was an opportunity to reestablish that. Yesterday, I introduced the Family First Act, legislation to streamline and simplify provisions in the tax code and to support working families with an updated and enhanced child tax credit. This will provide tax relief for parents with young children and create new tax credit for pregnant mothers. Ms. Marple, how would either a baby bonus or increasing the CTC amount for children under 5 provide a tax relief for working families, and would this have benefited your family?
Yes, thank you for the question. When your family's growing and your kids are young, a lot of changes are taking place. You're changing jobs, childcare looks different, you need a bigger house, you need a bigger car. There's a lot of pressure put on the family, and life gets really busy. Adding a baby bonus or something like that, like you were referring to in the bill, would definitely help compensate for all of those big changes that a growing family is facing.
You're highlighting flexibility because you're going through a lot of change. As my kids get a little bit older, they would be mostly outside this range. We're still supporting those families, but and recognize that it's still expensive. Kids are expensive regardless of their age, but particularly in that first 5 years, the change that happens to the parents and their situation it's important to make sure that we address that. So thank you for that. This is something we're really excited about. I think it takes a look at tax provisions that have been around for a while, and when things get stale and have been around, it's time to shake it up a little bit. This child tax credit is a huge increase, and my Democrat colleagues should be very supportive of this. It's a huge increase, but it also offsets it by taking a look at antiquated tax policy that probably needs to be changed or eliminated. And we're doing that, and we're creating a more pro-growth, pro-family approach, and I look forward to continuing to drive this forward. We also introduced the Small Business Growth Act, which would support small business growth by helping small businesses obtain equipment necessary to buy their operations. We've talked a lot about this. I'll just quickly ask Ms. Gallagher and Ms. Silver, anything to add on how important it is to be able to up that? Instead of $1 million, it's going to increase to X number of dollars. Like it's going to help small businesses be able to buy their equipment and get that right off it. Anything to add to that?
I can certainly agree with it 100% that that is an incentive to investment, and I would look to our actual business owner here and how she would respond.
And you're talking about section 179?
179, yes.
Yeah, absolutely, increasing that.
It's an increasing of the threshold.
Yes, that would help us tremendously with planning and drive investment, which makes us more competitive and gets our customers what they need.
And a point that I make when I'm back home is I say, okay, if you have that ability to invest more equipment, guess what? That other company that's selling you that equipment, they're now paying more taxes. Because they're excited about their business growth. So they're paying. We are still contributing to tax revenues. It's not a decrease in taxes. It's actually spurring significant economic growth, and that can't be discounted. Thank you so much. I yield back.
All right, we will recess until after votes, and then we'll begin right after that. The meeting will come back to order. Mr. Yocum.
Thank you, Mr. Chairman. I ask unanimous consent to enter into the record 2 documents from the Blueprint for Life Coalition, as well as a letter from the Americans United for Life.
Without objection.
I want to start by saying what an honor and privilege it is to be here at my first Ways and Means Committee hearing. A seat on Ways and Means matters a great deal to the people of Indiana, with 2 great Hoosiers having served before me. Our dear late friend, Jackie Walorski, and Senator Todd Young before her. I hope to follow in their footsteps with hard work, compassion, and Hoosier common sense. I look forward to working with my colleagues on both sides of the aisle toward pro-growth tax, regulatory, and trade policy so that manufacturers, innovators, and job creators can expand, hire, and invest, so that agricultural producers can compete and win in markets new and old, and so that families have the best shot at achieving the American dream. I'm glad that we're kicking off the 119th Congress by highlighting the importance of making President Trump's tax cuts permanent. The Trump tax cuts have been transformational for families and small businesses in my district. If they expire, the average taxpayer in my district will see a 27% tax hike. That's $1,252 for the average family of 4 in my district. That cannot be written off as mere crumbs. It's real money for the average hardworking Hoosier family that's trying to live within its means. Ms. Marple, I'm a father of 3, so I greatly appreciate your time here to testify today. I know it's no small task. I thought you were so spot on with your testimony when you called the child tax credit a simple, significant way for the tax code to communicate the value of hardworking parents raising their children at a time of high inflation. That's why I'm concerned that over 87,000 families in my district would see their child tax credit cut in half if President Trump's tax cuts were allowed to expire. Ms. Marple, my colleagues on the other side of the aisle like to talk about their enlarged child tax credit as they temporarily created during the pandemic. But you mentioned that you and your husband have worked so hard to support your family and that you're not looking for a handout. Can you talk more about the value and importance of work as a requirement for receiving the child tax credit?
Thank you for your question. Yes, I think there's a big difference between receiving an encouragement from the government and something that produces encouragement and something that produces entitlement. And the truth is, the desire of me and a lot of other parents is to work hard to provide for our family. There's a fulfillment there. And so being uplifted and having that burden of supporting our family lightened, it goes a long way.
All right, thank you.
Yes.
And one more quick question. If the Trump tax cuts were to expire, not only would the credit be cut from $2,000 to $1,000, but a requirement for children to have a Social Security number would expire as well. Now that we're, after 4 years of the Biden-Harris administration's failed open border policy that saw nearly 9 million illegal immigrants come across the southern border, do you think it's fair that your hardworking tax dollars that you worked hard for could potentially go to people who are not here in this country legally?
No.
Right, thank you. Mr. Duke, you seem to imply that families making over $400,000 a year shouldn't be able to claim the child tax credit at all. Fair enough. I want to highlight an August 2024 article from Politico, which reads, quote, upper income homeowners are scooping up billions of dollars in tax credits for making their residences more energy efficient, while the poor are getting almost nothing under the same Biden administration effort. Should the federal government be subsidizing people making over $400,000 who want to put solar panels on their roof?
I'm not an energy expert, but I think that, those credits are, about creating, a supply chain and industry that really, puts us forth in the 21st century.
So you're not an energy expert, but you are a tax expert. So do you think that those tax credits should go to families who are making wealthy families making more than $400,000 per year?
I think it was designed well.
So what about the EV tax credit, which is capped at $300,000 a year. Do you think that that cap should be removed and we should pay for wealthy families' electric vehicles?
Look, I think that Congress, and we're going to see this when we talk about extending the 2017 tax law, obviously has a lot of different,
What do you recommend?
I would actually have to know more about EVs and, roofs to know exactly what the right level would be.
Great. Thank you for your non-answer. Mr. Chairman, I yield back.
Mr. Gomez.
Thank you, Mr. Chairman. Before I get started, I just want to say to Angelenos, I represent Los Angeles, I'm committed to securing whatever resources necessary to fight these fires, but also help people rebuild their lives. I know it's going to be a long road ahead. Also, I did go back because of the fires this weekend, and I was in my district. And in my household, we do what other households do. We divide the chores. And one of my chores is to go grocery shopping. So I went to the store, and I picked up some of the basics: Cheerios, eggs, soup. Nothing unusual, nothing fancy, no sparkling water or prime rib. It was the basics. And as I was leaving the store, I was looking at this receipt. And as I looked at the receipt, I was like, $65, not too bad. But then I remembered I went to the store earlier that day and spent $20 for milk, bread, oranges, and strawberries. I have a toddler, and they eat a lot of strawberries. And a few days before that, I spent $150 for groceries. That included diapers. So in 1 week, I spent $235. That's a lot of money. Unfortunately, my family isn't alone trying to pinch pennies and trying to watch what they're spending. So as we start this debate, I will keep in mind all those families that look at their receipts and how much they're spending. Families that are feeling the pain of higher prices, families with children, families that work multiple jobs, mom and dads that go to a morning job and an evening job and a weekend job just to make ends meet, just to pay their rent. And I want to be clear. Last November, families didn't vote to keep treading water. They voted for a government that will lower prices and help them get ahead. But what the Republicans are offering is more of the same: high prices and tax cuts for billionaires and the ultra-wealthy, while working people fall further and further behind. So how do I know that? Let's just look at what they did in 2017. In 2017, Republicans had a choice, and they chose to give permanent tax cuts to corporations and gave temporary tax cuts to families and individuals. And if that wasn't true, then we wouldn't even be having this hearing today. The benefits of the last great tax bill, as the Republicans claim, went to the top income earners. The top 0.1% got a $250,000 tax cut, while working people got around $500 to $600 per year. Mr. Duke, will extending the Republican tax plan, or the TCJA, do anything to lower costs?
No.
No. So to my Republican colleagues, let's write a truly bipartisan bill that actually makes America affordable. Let's work to lower the cost of housing by cutting red tape and incentivizing building across the country. Let's lower the cost of childcare by investing in the workforce and the small business entrepreneurs that provide that care. Let's lower the cost of groceries by preventing monopolies from squeezing out the little guy. I know Republicans often say that we don't have the money for these sorts of investments. But Mr. Duke, let me ask you this. If we made Elon Musk, Mark Zuckerberg, the ultra-wealthy and the big corporations, and all their billionaires pay their fair share in taxes, do you think we could afford these things that I just mentioned?
Absolutely. The Biden budget contained a minimum tax on billionaires, as well as reforms to how we tax capital gains for the highest income Americans. It raised trillions of dollars.
So I like to also point out that people talk about the establishment in D.C. They say it's one day it's the blue establishment, the other day it's the red establishment. See, I don't think there's a blue establishment or red establishment in D.C. I think it's the new green billionaire establishment. And it is our job to push back against those individuals that want to pass a tax structure that benefits themselves at the expense of the working class. Mr. Chairman, I have a question for you.
Yeah, that's kind of unusual, but go ahead, Mr. Gomez.
Well, this is an unusual time. Let's say we actually get together in a room and negotiate a bipartisan tax plan that benefits the working people, invests in what we want. If Elon Musk tweets to you to throw that out, will you reject Elon Musk's request, or will you guys capitulate like you did in December?
Mr. Gomez, the only person that the Republicans are beholden to are the people that send them to Washington, and Elon Musk is not a constituent.
Okay, well, see, call me skeptical, but what I saw in December was dastardly. So if you guys are wanting to negotiate a real bipartisan tax plan, let's do it, and let's get something that helps lower costs for the American people. With that, I yield back.
Mr. Miller.
Thank you, Mr. Chairman. I'm glad Mr. Gomez used his 5 minutes for a Twitter clip. Thank you. But thank you, Mr. Chairman, and thank you to our witnesses for their time and testimony today. I'm honored to be joining the Ways and Means Committee with a shared goal. That's to drive forward an economic agenda that ensures the United States remains the global economic leader. Today, we are here to discuss the need to make the Trump tax cuts for working families permanent, ensuring prosperity for families and businesses across the nation. The Tax Cuts and Jobs Act, championed by President Trump, was a transformative bill that provided much-needed relief to businesses and spurred investment across the country, as we have heard here today. It reduced the corporate tax rate, introduced full expensing for equipment purchases, and created a business environment that encouraged growth, innovation, and greater global competition. These provisions gave companies the certainty to reinvest in their operations, hire workers, and strengthen their local communities. I proudly represent Ohio's 7th Congressional District, a region with a strong manufacturing and agricultural backbone. These policies drove significant job creation and economic revitalization to the area. Small businesses and farmers all benefited from the ability to reinvest their capital savings, expand their operations, and provide good-paying jobs for hardworking Ohioans. But it wasn't just businesses that saw the benefits of this historic legislation. For individual taxpayers, the Act expanded the standard deduction, simplifying tax filing and putting more money back into the pockets of working families. This simplification was transformative, especially in working-class communities where most taxpayers claim the standard deduction. By eliminating the need for a complex and time-consuming itemization process, the expanded standard deduction has made tax season far more efficient and far less stressful for millions of Americans. In my district alone, 93% of taxpayers and families claim the standard deduction when filing their taxes and underscoring its vital role in simplifying their financial interactions with the government. Maintaining the current standard deduction levels allows families to focus on their priorities, whether saving for the future or supporting their children or investing in their homes while enjoying greater financial security. Ms. Gallagher, we know that the increased standard deduction significantly boosts disposable income for families, directly benefiting individual taxpayers. However, it's clear to me that the advantages for households and businesses are deeply interconnected, as stronger household finances drive broader economic growth and support local businesses. Can you please comment on how the standard deduction affects disposable income for families, and have you observed any indirect impacts on small businesses or local economies with high reliance on this deduction?
Thank you for that question, my fellow Midwesterner. Absolutely, the standard deduction has been a life changer for individuals and, frankly, my fellow tax preparers. As you were talking about tax season being made so much easier, for me, my staff, it has been a tremendous help from that perspective. The taxpayers, however, on that side, have received significant tax savings. Many of them were far under that level even when they itemized. And so the standard deduction gave them increased deduction, i.e. less taxes to pay, and more money in their pocket to contribute to their communities and to their own households. So I absolutely saw a direct impact on individuals and small businesses in my communities.
Thank you for that answer, and I have as well. And as I will just restate, 93% of our constituents in the 7th District of Ohio use standard deduction. Ms. Silver, in your opening testimony, you highlighted how small and medium-sized manufacturers are leveraging the current TCJA and tax benefits to reinvest in their local communities and expand their workforce. However, with many of these provisions set to expire at the end of this year, we face the potential loss of nearly 250,000 jobs just in my home state of Ohio, as Congressman Kerry earlier mentioned that to my right. Could you elaborate on the specific negative impacts that businesses like yours and others across the country would encounter if these critical tax benefits are allowed to expire?
Well, I can answer that by saying that, so I'll expand upon what I've been able to do because of TCJA. So when you think about that, it's like, I'm not gonna be able to do this stuff when these tax policies expire. So one example is I was able to use the 199A pass-through deduction to reinvest in my company. We bought our first collaborative robot. It is integrated with one of our lathes. It's 2 spindles. It allows us to run this machine unattended at night. So it increases my throughput, my productivity, and so much so I was able to go to my customer in the fluid motion control industry, come down on his price, and then still have a healthy profit myself. So it was a win-win for the manufacturing supply chain that I was able to use that deduction to reinvest in my company. So if it expires, these are the things I can't do. I also can give you another example if you like.
It's up to the chairman.
Okay.
All right, yes, ma'am.
We created a high school internship program. It's a job It is a job shadowing program. Our local high school is 100% of the students are economically disadvantaged, and it allows the students to come in and job shadow on the factory floor. These are students that have never been exposed to manufacturing before. And I've bought equipment so they can train on this, and it's really, it's impacted our community, it's impacted our culture, and now I have two full-time apprentices learning the machining trade.
Thank you for sharing that, Ms. Silver. I'm out of time, but thank you for sharing that with the American people. I truly appreciate your testimony and all the witnesses here today. Thank you, Mr. Chairman. I yield back.
Thank you, Mr. Bean.
Thank you very much, Mr. Chairman. Good afternoon to you. Good afternoon, Ways and Means, our witnesses. What an honor to have you here. I know it's hard work to testify for going on, our 5th hour now. First of all, it's just an honor. This is my very first time speaking in committee. It is indeed an honor and privilege to serve on this committee. I fought to serve on this committee for the same reason that I fought to serve in Congress. Our country's in trouble. I believe debt is one of our greatest challenges. We've got to fix it, and we continue to dig. We continue to go in the wrong direction. So, Mr. Chairman, you and Ranking Member Neal, I look forward to working with each of you as we build a strong America that can once again be that shining city on a hill to serve as a beacon for countries around the world. Ms. Marple, you have testified what a game changer the tax credit is. You've said that it's made a tremendous difference for the Marple household. Is that correct?
Yes.
Okay, it has. You've testified. So are you a billionaire?
No.
Wait a minute. You must run a Fortune 500 company. Is that correct?
It's more like a small business.
Okay, so wait a minute. I'm confused, Mr. Chairman. All I hear is this Trump's tax cuts have only benefited billionaires, Fortune 500 companies, and I looked at your income, Ms. Marple, and it's part of your testimony. It's $75,000. Is that correct? About right?
That year, yes.
That year, but it's true then that you're not a billionaire. I don't understand how the Trump tax credits could help somebody like you making that amount of money, but yet it did. Was it a game changer for you, Ms. Marple?
We work for the wealthy, and they pay our paychecks.
But getting that tax credit, that really made a big deal for you. I mean, your testimony, you said it is. And by the way, we're all very proud of you. Who's very proud of you are your folks for raising those 3 boys. I, too, raised 3 boys. And before you know it, they're taller than you. They're out the door. And it's the most important thing that we do on this planet is to launch successful kids. You're doing the right thing, and we're proud of you so much. Ms. Couch, you also have testified that, by the way, Ignite, I've watched you grow 200 clients. You're rocking it, too. You've testified that your clients have done so well. Is that correct?
My clients are doing well thanks to...
Very good. Now, wait a minute. So that means they're all billionaires. Is that correct?
They are not billionaires.
Wait, they're Fortune 5. You just do a Fortune 500 exclusively. Is that right, Ms. Couch?
No, far from it.
Okay, so it's amazing because all we hear, it helps the rich, the top 10%, 1% or whatnot, but yet we both know it. I can see it and look at your eyes. You're the movers and shakers. That's who you do. The people that employ, put this country to work, that's your clients, and I know you're proud of, your folks are proud of you for Rock and Ignite. Ms. Silver, we're all proud of you, of what you have done right now. I'm gonna go to a scary place. I wanna go to a very scary place. It's a scary question, and that is this. If the qualified business income credit were to go away, and you were faced with a 43% tax rate, your company and you, that rate, which, by the way, is much higher than communist China. What does it look like? Is that a grim picture? Is that a scary question? What's going to happen?
Yeah, it's not good.
So you might have to lay off Mr. Robot that you bought. You might have to do some other big, drastic decisions. You got 20 employees that are depending on you, whether or not food goes on their table. Can they depend on you if you're having to pay a 43% income tax rate?
No, and so
it's going to be challenging.
Right, and we've been talking about like what we do with these tax policies, how we reinvest.
Yeah.
But a contrasting example that I could give you is that, there's economic downturns, there's normal business fluctuations.
You're going to have to make hard decisions, is what you're saying. Is that right? Hard decisions. Hard decisions, yes, that is hard. It's hard, it's scary to even listen to it. I want to take you back to 2017. Let's remind everybody, because we've got the receipts of what happened in 2017. Adele's Hello was playing on the radio. Dunkirk was the top movie, and Trump had just passed tax cuts. Let me tell you what happened. Net worth among low-income families rose 37%, while middle-income families' net worth increased by 40%. Even the bottom 20% of earners' incomes rose massive. We saw the economy getting on fire, and that's what we're going to have to do if we're going to solve our economic woes. Yes, we have to have economic growth. We have to make cuts. I'm making cuts. We're going to make cuts. But we also have growth in our economy. And good gravy, I've only got through page 1. It's going to be really tough to ask all these questions. So with that, Mr. Chairman, looking forward to working with you. Thank you again. I yield back.
Thank you, Mr. Horsford.
Thank you, Mr. Chairman, and to the ranking member for this important hearing, and all to our witnesses for being here for what has been a long day for all of you. Look, my colleagues have noted, and it is fact, that the top 1% of households received the most benefits from the TCJA. Let me put that in perspective, though. Data from the Center on Budget and Policy Priorities found that those making over $800,000 on average saved $61,000. Congress's own nonpartisan Joint Committee on Taxation says that millionaires saved over $78,000 each year. Now, for someone living in Tonopah, Nevada, which is in a rural part of my district in the center of Nevada, that's double their median salary. The constituents in my district have called on me to help them cut household expenses, to put more money back in the pockets of hardworking people like them, and that's why I introduced the Tipped Income Protection and Support Act. No tax on tips. Tips is a gift, not a guarantee, and I hope that the chairman will agree and work with me on my bill. The TIPS Act would exempt income tax of tipped wages for many working class families. But let me be clear. I'll work with anyone on this committee that wants to help working families keep more money in their pockets. However, working-class families can't afford a tax scheme that benefits the top 1% and doesn't help them. Mr. Duke, when drafting the TIPS Act, I put income caps to ensure that only working-class families can receive the bill's benefits. Should we consider income caps on TCJA programs that predominantly benefit the wealthy, like 199A?
That's right. Treasurer, yeah, that's right.
Yes?
Yeah.
Okay. Look, I'm glad that we have so many small businesses here today, and that's intentional, because there was a choice made when they passed this bill in 2017. They made the tax breaks for the big corporations and the wealthy permanent, and they made the tax reductions for you temporary. And now they're here to say that unless we pass the entire bill, it's going to hurt you. Well, my question is, why didn't they prioritize you to begin with? Why didn't we make the small business tax reductions permanent and the corporate tax reductions temporary? That was the choice they made. Now, what's also important is that the bottom 90% of workers' wages were unaffected by changes in the corporate tax rate. I'm glad, as I said, that we have business owners like Ms. Silver here in this discussion, because we need to focus more on small business efforts, and I commend you for everything that you're doing, including your jobs program. You are the ones who have accounted for 62% of net new job creation since 1995. You, small businesses. Small businesses account for 98% of the firms in the state of Nevada. Mr. Duke, the topic of this hearing is the need to make permanent the Trump tax cuts for working families. Given the information that I just shared, can you explain how reducing the corporate tax rate helps small businesses and working families?
No, I cannot.
Because
cutting the corporate tax rate, I mean, for one thing, it increases our debt, which increases interest rates, which, makes it much harder for startups and, small businesses to survive. And at the same time, obviously they have to compete with, with these big corporations. Especially one thing I'll say is, especially, multinational corporations pay half the corporate rate on their overseas profits. That's something that's not available to American small businesses.
So here we are now. This is a tax scheme that, if we renewed it with no changes, would cost the American people $4.6 trillion. What can we do with $4.6 trillion? We could lower costs. We could expand the child tax credit, which is not an entitlement. Working families like Mrs. Marple deserve to get benefits from our tax code, not just big corporations. We could build more affordable housing. We could put more money into low-income and affordable housing for all families, including veterans. That's why I've introduced legislation to take on corporate landlords that are gouging renters and making housing less affordable. Yet the TCJA isn't helping the housing market. It's extending the bill doesn't help build up the supply of housing, nor is it helping lower housing costs for buyers and renters like my bill would do, the HOME Act. So work with us. Let's come up with a more reasonable approach. Let's use the tax code to help small businesses, to drive the economy, to help families who are struggling. That should be our priority, not billionaires and big corporations. I yield back.
Thank you. Mr. Moran.
Thank you, Mr. Chairman. For the panel, let me give you a little foundation about my district, the 1st District of Texas, 17 counties, rural Northeast Texas, and let me provide this foundation of what the impact was of the TCJA back in 2017 and what would happen if it expired, and then I want to ask some questions. Expiration of the TCJA in my district alone, for our businesses there, would put 12,000 plus family-owned farms in Texas 01 in jeopardy because of having their estate tax exemption slashed in half next year. 37,000 plus small businesses in Texas 1 would be hit with a 43% tax rate increase if the 199A small business deduction expires. And the failure to renew certain pro-manufacturing initiatives in the TCJA puts nearly 14,000 jobs in my district at risk. These statistics underscore a larger theme that across several industries, whether it's agriculture, small businesses, or large manufacturers, the TCJA promotes the growth of business in America. Now more than ever, it's important to ensure that Congress continues to put Americans first by providing the tax incentives for American businesses to grow themselves. Restoring the immediate R&D expensing provision in the TCJA is a prime example of putting Texan and American businesses first. As you're aware, up until 2022, the tax code allowed manufacturers to immediately deduct 100% of R&D expenses in the year that they were incurred. At present, the U.S. is just one of 2 countries without this essential innovation incentive. Meanwhile, China offers things like a super deduction for research spending, and it's not the only nation providing more than that attractive R&D incentive. Over 15 other countries now offer deductions surpassing 100% of eligible R&D costs, making the U.S. a less attractive and competitive environment for research and development. Ms. Silver, I want to come to you first. Since you were the National Association of Manufacturers, Small Manufacturers Chair, tell me in your expert opinion, what impacts, if any, results from the U.S. having weaker R&D incentives than other countries, especially countries like our adversary, China?
Well, R&D is what our country's built on. I manufacture parts, I machine parts that are built from companies, mainly equipment manufacturers, who are using R&D tax policies, R&D money, R&D support to come up and innovate with new product lines. So this is what our country's built on, is research and development and innovation.
And it's critical to have that immediate 100% expensing in the year that those expenses were taken, so that those businesses will be incentivized to innovate and grow. Is that right?
Absolutely.
Ms. Gallagher, you talked a little bit about the 199A provision. In your experience, what do most small businesses do with the money that they save from reduced tax rates using Section 199A?
Reinvest it back into their businesses by way of either employees, hiring more employees, or buying more equipment, or increasing their infrastructure for future growth.
Yeah, in your written testimony, you talked about how these companies that you work with, they'll reinvest to pay for health insurance a lot of times for their employees, or to buy new facilities, or upgrade their equipment and their computers, things that they need to grow, to innovate, or to expand production, all of which creates new jobs, correct?
Yes.
And that's what we want, is the economy to grow, and we want more opportunities for American working families. Isn't that the point of 199A?
Absolutely.
And if we take that away, then what happens if those businesses no longer pay that lower rate, that 21% rate, but are paying now a 43% rate? This more than 99% of the businesses in America would pay. What happens now for their ability to provide health insurance, or upgrade their equipment, or expand their production, or to create new jobs?
Economic downturn is what happens.
That's exactly what happens. I want to end today by agreeing with Mr. Gomez when he argued that we should consider the impact on working families when we consider the tax policy this year. I absolutely agree. In my district, we have a median yearly income of $61,000. A family receiving this yearly income would see $11,042 tax increase should the Trump tax cuts expire at the end of the year and we do nothing. For a family of 4, this $1,142 is worth about 6 weeks of groceries in my region. It's also enough money to cover about 27 full tanks of gas, even in our big old trucks. And that's based on the average pricing. Those are important things. Groceries and gas are important things to every American and every East Texan that I represent. The Tax Cuts and Jobs Act cannot expire. We must continue those provisions to allow families to thrive and businesses to grow. With that, Mr. Chairman, I yield back.
Thank you. Ms. Plaskett.
Thank you so much, Mr. Chairman, and it's so good to be back here on the committee, to be a part of these discussions which affect so many Americans. The notion of taxes and trade, this is in fact the most important committee, and the work that we're doing are going to affect every American, as we've said. I'm grateful to be a part of the debate on the ways and means in which we fund American government, and particularly fund businesses, fund how the mechanisms of our economy grow here in the 119th Congress. I'm eager to serve as one of 3 Democrats on the Budget Committee as well, which will no doubt be a place of fierce debate as we work in the next 2 years. And I look forward to advancing shared priorities with my Republican colleagues. I, Mr. Chairman, I'm one of the few members of Congress who actually worked on and was a member of the other party at one point. I worked in the Bush administration for a number of years after September 11th, and so I see myself in some ways as a bridge in the actual policy ideas that I put forward. And we come together here in both of these parties to try and make permanent and work on a way that supports the American dream. But I have to say that I see the work on the 117th with President Trump's crowning achievement being the tax bill as an unequitable piece of legislation for all Americans. Achievement gave 0.01%, an average of $252,000 of tax cuts, while the poorest fifth of Americans only received $70. It seems that the largest cups were filled with no overflow going to those most in need. By percentage, 56% of the tax cuts enriched shareholders, 44% lined the pockets of executives, and 0 went to 90% of the workers in those businesses. You know, in the early days of our nation, native of my island, St. Croix, where I live and my family is from, our founding father, Alexander Hamilton, famously wrote, "A national debt, if it is not excessive, to us will be a national blessing." It's that phrase, if it is not excessive, has always been important, but never more important than today. The need for tax reform is critical for so many different people. I've been listening to my colleagues, being myself and Mr. Swazi and others just coming back to the committee. We're now at the end, so we get to listen to a lot of the discussion. And I thought some of the things that were discussed were very, very interesting. We talk about the child tax credit and how important it was. I have 5 children. I understand the importance of the tax credit. I was not always a member of Congress. I was not always an attorney. I struggled for many years. I worked a full-time job, went to law school at night, had small children. I understand the need for that. But the children who need the most are not helped. By insisting on the earning requirements for the refundable tax credit, we are leaving out children who need those resources the most. There's also, when we talk about manufacturing capacity actually contracted in the years following the passage of TCJA. I'm so grateful that we do have individuals who did receive that manufacturing benefit, but so many did not. According to the Federal Reserve, manufacturing capacity contracted 0.5% each year on average from 2018 to 2021, and then expanded 0.5% in 2022 and 1.2% in 2023. And manufacturing capacity is expected to grow by 1.3% in 2024. Let's get the facts correct. Research first published in 2022 by authors affiliated with the Joint Committee on Taxation and Federal Reserve found that the benefits of TCJA's corporate tax reductions did not trickle down to workers. In fact, the authors concluded that the earnings do not change for the workers in the bottom 90% of those corporations. There's work that we can do. There are ways that we can come together. I think that supporting our businesses is important, not just our small businesses, but I listen to my colleagues say there will be cuts. We need to make sure that those cuts do not affect the people who need those resources the most. I yield back.
Thank you, Mr. Swazi.
Okay, thank you, Mr. Chairman, and thank you so much for sticking around. Really appreciate that. Mr. Ranking Member, thank you. Mr. Kelly, and the witnesses, 5 hours you've spent here. We're very grateful to all of you for spending so much time. Thank you so much. And we know it's been very cold in here. It's a little warmer now. It's been cold here all day, but thank you so much for being here. So first I want to note something that was noted earlier today by one of my colleagues, Mr. Doggett, who said Steve Bannon, who's very much affiliated with the Republicans these days, is out there saying we should increase taxes on the wealthy, we should increase taxes on corporations so we can pay for tax cuts for the middle class. So I just want to point out that that's happening with some of your big supporters, Jason. Okay. So I'm here to talk about, one thing I've learned since I've been in Congress, I guess we all know this, but I've really learned it since being in Congress and talking to my colleagues, is how different it is for different people in different parts of the country, in different states, in different neighborhoods. People's incomes are different in different parts of the country, but so is their cost of living, and so is their property taxes and their income taxes. That's a very big difference. Mr. Moran, when I was walking in, was saying that the average income in his district is $61,000, I think he said. I have one of the higher incomes in the country, but our property taxes are way higher as well, and our income taxes are much higher. I'm from New York State. And the 2017 tax law delivered a lot of benefits to some people in America, but it hurt the people in my district, and it hurt people in different parts of the country very, very badly. So I'm concerned about especially the state and local tax deduction. The state and local tax deduction was put in place by the federal government over 100 years ago when they first developed the progressive income tax in America, the federal tax. And when they were debating it, the governors and the mayors said, we don't want a federal income tax because we want to be able to tax at the local level, at the state and local level, to pay for our police and our fire and our local services. They said, no, don't worry, we're going to give you a state and local tax deduction because we recognize it wouldn't be fair for you to pay federal income taxes on the state and local taxes you've already paid. It's just not fair. It's not fair that states like mine and other states throughout the country have relied on this tax deduction for 100 years up until 2017, and then it was capped at $10,000. That's why when we passed 3 times when I was previously in Congress, a restoration of the state and local tax deduction, it was supported by the U.S. Conference of Mayors, the National League of Cities, the U.S. Association of Counties, the firefighters, the teachers, the police throughout the country all support restoring the state and local tax deduction because it's not fair to pay taxes on the taxes you've already paid, because it's not fair that governments have relied on that deduction for such a long period of time and then it was summarily taken away from them relatively quickly. And it's not fair that people did get tax cuts in some parts of the country, in some places, at some income levels, but in other places like mine, they didn't get those benefits. So I want to ask each of the witnesses here, if you recognize that the state and local tax deduction is important to a lot of taxpayers in the country. Ms. Gallagher, are you an accountant, I think?
Yes, I'm a CPA.
Yeah, I was a CPA too. I was trained as a CPA. I used to work for Arthur Anderson and Company.
Ah, very good.
So do you think the state and local tax deduction was beneficial to a lot of people in the country at one time?
Yes, indeed. When it was fully deductible, it was a full tax deduction and impacted all taxpayers, probably higher income taxpayers more just because they pay more tax.
Well, that's a very interesting point because higher income, that's like a question we talk about. What's the middle class, okay? So in my district, if you're a police officer and you're married to a school teacher, you're making $200,000 a year. Now, in some places in the country, Mrs. Marple, when I said that, her eyebrows went up, right? And she's like, wow, $200,000, that teacher and a cop, how's that possible? But in other places, if you're making $200,000 a year, you've got you're in a gated community, you've got an indoor pool, and you belong to the country club. But where I am, you're just getting by. Because your taxes are higher, your cost of living is higher, your property taxes are higher, so it's different. That's why it's so much better if we work in a bipartisan fashion to try and find common ground, to try and find a way to address the different people throughout our country, and not just make it like it was the first time when they asked President Trump, they said, hey, isn't this going to hurt the people in New York where you're from? He said, oh, they didn't vote for me anyway. That's not the way we should be doing our business. We should be trying to work together. So I'm not going to ask you, Mrs. Marple, because you already answered with your eyebrows, but Ms. Couch, do you know about the state and local tax deduction? Do you think that helped a lot of families in America?
Yes, I'm sure that it did. I think for Georgia, being
Very different place.
It's very different. So,
Where are you from, Ms. Silver?
North Carolina.
Yep, different there too. A lot of people are leaving my district to go to Florida, South Carolina, North Carolina, and some of my Republican colleagues boast about that. But when I asked Steve Mnuchin, who was the former Secretary of the Treasury, I said, when those people leave New York, who gets left behind to pay the remaining taxes? He said, the people that are still living there. That's making taxes go up for people. He said, well, you could cut their services, but do we want to cut their police and their fire and their teachers? All right, Mr. Chairman, thank you so much for allowing me to go a little bit over. I apologize.
Thank you. I'd like to thank all of our witnesses for appearing before us today. It's been a long day, and you've done a phenomenal job. We appreciate that. Please be advised that members have 2 weeks to submit written questions to be answered later in writing. Those questions and your answers will be made part of the formal hearing record. And with that, the committee stands adjourned.